trading like in Kenya and Tanzania. Although the trade balance is in favor of Kenya by a figure of about 5 billion. 5 billion. We trade what we sell to TZ is about 65%. We get 60% worth of goods from them. Then he said the issue of security and stability of countries within all the borders is critical, because when your brother is suffering, it means you cannot access the market. And we all know the small things that happened in TZ a few days ago. We even lost some life, which is not good. And trading, though, for those of us who are within the borders, it means you will not be able to trade with them. I also want to mention we had the country director of UNINDO, and he challenged us yesterday, and I want to imagine today we have reacted to the challenge that he said. He requested us to say how many of us yesterday were wearing a product made in Kenya. How many us? Because we are talking promoting Buy Kenya, Build Kenya. How many of us today agreed to take the challenge that we were given by Madam UNIDO Kenya? Madam Tari. Me, I have done today. I've come with a belt made in Africa, made in Kenya, and I bought it from the Maasai team. I can see a gentleman raising the hand. Anybody else who took up the challenge? So we are still promoters. I've seen Madam Jogu. I've seen the secretary. The beads. Has probably created 2 jobs. So we are not still doing well. And I remember somebody said the CS added some weight to that and said we are doing 15%. But he said if we do forensic audit on what we are laying, probably it will be less than 10. So today I did figure all the specifically of unlocking investment in gender and youth for SMEs. We don't forget about gender. Actually, and is an adaptation fund. And she called and urged on closer collaboration amongst all the players. And they say, ukitaka kufuja shawa, si unawekelea kwa kidole moja? Unawekelea. So one finger. YSA on behalf of the peers did some remarks, and he highlighted on the government continues to advance and targets on initiatives such as county aggregation and industrial park that's happening across the country, and it is expected to be a plug-in for any investor. Just plug in and do what you want, then that's programmed to be. And currently, I think there are 13 of the counties, KIPes, that are almost at 80% complete, and we expect them probably to be running by next year. So, where are we? I can't read that. They are also on something that was mentioned on special economic zone as an avenue for decentralizing industrial activities, and there are a number of special economic zones that are going on in the country, a number of them, and we know the advantage as centers for industrialization and manufacturing. Let's go to the next page. Anyway, we can mention on the sessions on panel discussion. That was on session 3 on enhancing manufacturing competitiveness, where you had a panel of the director, ACA, Dr. Robbie. We had the chief executive of CAM, Tobias. We had the representative from Isuzu, Kenya. We had somebody from Shadaria Industries, and the chairman of CKL, Mushai Konyiha. And the emphasis specifically was on issues about African AFCFTA, and it was noted on the need on improving infrastructure, logistics, and policy. And there also was issue on competitiveness, on the growth of the productivity by SMEs and MSMEs, and one of the issues that was mentioned was about financing and certification, and this was addressed basically to address the issues of market access, and we know an issue of innovation also came up, and engagement of the youth, and we know the budging of the youth in this country, if it's not well addressed, is a big issue, could be a big issue in the short term and in the long term, and I think we have experiences on that. The plenary brought our issues on challenges about accessing trade and finance. We know finance in Kenya is not very cheap, and a number of things have been done. And one of the things that came from how to address issues from Kenya Association of Manufacturers, it is announced on formation of youth in manufacturing caucus, and it was well articulated, so we need to take advantage of those things, those initiatives and that have come up. On the key recommendations about the same, we talked about strengthening partnership between government, private sector, and the development partners. This is generally all the players. And then the need of supporting green and digital industrial transformation across the manufacturing sector. We also had a presentation by the Principal Secretary, State Department for Livestock, where he was represented by a Dr. Maritim, the acting CEO of Kenya Dairy Board, and he talked of the importance and the value chains and the ecosystem, how it can, of the dairy, how it can contribute to the economy, and actually it's quite broad. He reiterated the government ambitions on goals on transforming the dairy industry into a globally competitive and value-driven sector, to include doubling milking production to 10 billion liters per annum. And we know the dairy sector in Kenya, but in Africa, Kenya could be among the second, if not the best. And we export, he indicated of the exportation, we export almost towards 1 billion liters per annum of the dairy, and specifically this is milk. And there are various products that comes from the dairy, from UHT, there is fermented milk, I don't know whether we call it mulsik for this purpose. There's the whole milk product, skimmed product, milk product, there's butter, cheese, and I remember mentioning about cheese. I know most of us do not take cheese, and we encourage ourselves to do it. We need to do the issue we mentioned, increase milk production, expand the market network, we promote on quality-based milk and payment system, because when everybody puts, I ask myself sometimes, like, I come from an area where we produce coffee. You see one farmer is doing his coffee so well. The same thing will happen with the dairy. Get quality milk, and if you compare ourselves like in the developed world, you find farmers, I'll give an example of Denmark, where farmers are given quota, and they say for this quarter of the year, the quality of milk we are looking at is a butterfat content of 3.8. You find a farmer getting 3.4, the other one 3.8, another one 3.42. When you get more, when you produce and get butterfat content higher than you needed, you are penalized for that. I ask myself, when it comes to payment for various agricultural products, when shall we get there so that the farmer gets his sweat, so that you not be getting an average price? You hear farmer one is complaining. That is the promotion of quality-based payment model. There is also need to support private sector investment for the same, because I think most of the things are done. And also the issue of regulation came up that we need to strengthen on regulatory and surveying mechanism. I don't know whether anybody has been involved in issues of dairy. If you look, the milk that we milk, my mom milks takes to the dairy, by the final product, they say they lose about 35% of the low milk to that. And sometimes, for this issue of about regulatory surveillance, you are told once somebody of you or a letter who has been in the export market, you said a bunch of flowers or cabbages or fruits to Netherlands, then it is brought back to you because of the amount of chemicals in it. We make a silly mistake here. I'll call it silly mistake because I'll be producing in the farm somewhere in Kirinyaga. No specific reason why I mentioned Kirinyaga or in Meru. We said our product to Nairobi. Who buys that product? See, it's our sons and daughters. It's our sons and daughters. I have made an extra coin. My son is in Nairobi. He goes to the market, he buys the cabbage that looks green. This is a charity I want to put. A cabbage that looks green. So what happens? Cancer issues, other diseases. I'll give an example. I used to train farming community many years ago on safe use of pesticides. And I used to ask, when I sit with people, I used to ask, when you go to the market, which cabbage do you buy? Anybody want to answer? Which cabbage do you buy? Madam Sabuni. So you look for the one that doesn't have worms. Can I change your mindset? From today, if you go to the market, you are buying a cabbage, look for the one that has a worm that is alive. It's clean. We are told indigenous technical knowledge helps in the development of science. For those of us who are familiar with those indigenous technical knowledge, if you go to Tulukana, and I have no worries about Tulukana, they'll not eat meat that is not being feasted on by flies. Why? There is something called the lethal dose in a product. If what the lethal dose we used in those guys who are in that space, LD50, that chemical percentage or chemical concentration that will kill 50% of the population of the test material. And that is what it is used for, looking at the minimum values of chemicals. So, if a housefly does not die because it's feasting on meat that has this, you know that meat is clean. If you go to the butchery and you don't see a housefly, I know when it comes to hygiene you say a housefly is dirty, but a housefly is not dirty. We are the people who are dirty. If you make the environment clean, even if the housefly steps there, we will not have cholera. So we are the problem. So my urge to you is, when you go to the market, look for a cabbage that has a worm. If you go to a butchery, you don't see an insect moving about. Avoid that meat that you would avoid, I know people are not like it. So that is another. We are through with the daily, but she also mentioned about market stabilization. And the conclusion about them, it was indicated the cost of processing is high. We know across the board, and the biggest cost of production this is power. Our feeds are also expensive, and there is also the seasonality of milk production. We had also a presentation from the biofoods by Madam Waidela, and she mentioned a number of things. She mentioned of the sector's contribution to the national economy, Kenya's agri-based manufacturing, as you have always been told, for us to move from one point to the other. In industrialization, the basis will be agro-processing. She said, despite the strategic importance, it is noted that, because she is also in dairy, that the dairy faces persistent challenge of productivity, and we are not able to keep pace with the population. On environmental degradation, say our farmers has intensified our production in the dairy sector, but in a very unsustainable way. So implies that if you use the principles of circular economy to be an added advantage, you cut on cost of production, and we also make sure that our environment is clean. It's indicated the need of stabilizing the supply chain. We know supply chain has a problem. The predictability, she also indicated on issues of our physical environment is not predictable. What is there today, maybe tomorrow will be totally different. And she brought up in the issue of triple helix model in collaboration. So we ask ourselves, this triple model of collaboration, the best principle is, if you remember, for those of us who found our grandmother, the one they used to cook in the village, they are the 3 stones. That's where that principle came from. You cannot make very good ugari. Wezi songa ugari vizuri ya ugari kama hakuna jiwe moja. You need the 3. The same thing with the githeri. When my grandmother used to do mokimo, nilikuwa naona anakanyanga mawe moja na mguu, natumia mwiko kutengeneza mokimo, and they used to come up so well. And indicated of the huge possibility that is there of backward, forward linkages. He had a very captivating words on what they do and what needs to be done on issues about technology, and indicating the university has been a leader in research excellence, and we need to take advantage of what they are doing. They have many things that they are doing that would grow our manufacturing sector and towards the contribution of manufacturing to the GDP, raising it from the current allowed 7 to 8% to the targeted 30% by the 2030. One of the pertinent issues that came in that panel is how Kenya can improve collaboration between academia, industry, and the government. The same principles of the triple of the three stones. Let me use the small words that we understand. And also on session 6, we had a representative from the acting deputy commissioner from KRA and the role of KRA that plays. I know most of us, we are not very good friendly. We are not very friendly with KRA. We think they are our enemies. And she indicated on the need of using AI on scanning of the consignment, probably closing the border. And at one point we are told somebody raised the issue. Why are we so proud about 7 kilometers in the border? Trucks waiting 7 kilometers. We should reduce it to 0 and ensure that the non-tariff barriers are across the border so that we can train and trade well, so that we make good money. Export initiatives, why she highlighted on them, on export including like trade logistic, information pipeline for transparency and building a business environment that enhances export to promote business across the country. And she gave us a number of things from EPZ, there are remarks, EPZA, we know what it produces and so on, enables company to operate under physical and non-physical incentives that are provided by the government. The advantages of doing it, that are times once in a while, talks of a limited market, limited access to about 20% registered companies required to export at least 80%, but 20 is said locally, and we can see it that even here the exhibition. We also mentioned that Kenya is one of the most digitally advanced economies in Africa, with a digital penetration of about 64% compared to other countries. However, we don't like good. Sometimes I like quoting what Professor Pierre have always said, that we should avoid comparing ourselves with dwarfs. It's a dwarf comparing who is taller. So let's compare ourselves with the people who are doing good. And I want also to say we had an online presentation by a professor from Kobe University, and there are 4 issues that he actually mentioned. And basically I want to invert what he presented from the top. We always start from labor intensive issues before we get to AI, and that is probably where we are. I want to imagine generally, I have captured what we went through yesterday, and I would give ourselves 1-2 minutes to do a small recap where I missed, and I want also probably as we do that I can indicate something here. It's always good to remember our being here, some of the institutions that are making us to sit here comfortably and do what we are doing. And we give credit to State Department and the ministry at large, with Kenya Association of Manufacturers, for the people who has facilitated this. We have the Mirror Glass. Thank you for that. Thank you for your support in all ways. And NSSF, Kenya Invest, we have Scrum Metal Council, Gildi, KEPSA, UNIDO, ACA. Phil, we are very grateful for the support that you have given for the success of this conference and the exhibition. Isuzu Kenya, I think they have changed the name, KENAS, KEBS, National Research Fund, New American Machining Complex, East African Portland Cement PLC, KDC, KLDC, and if I didn't mention your institution, please, there is nothing behind it, no malice, no contempt. And I want to ask for those of us who are there, whether they agree. This is not parliament, so I may not use, though agree that at least I have covered 50% of what I have said. Is a recap of what we said yesterday. We may lift our hands, but it is not compulsory. Do we agree? I can see 2 hands. Unfortunately, 3 hands. Unfortunately, they are seated together. So probably they could have connived to give me good points. Thank you for that. And I'm being informed. Let me first, we need to go to the next part. The keynote address is supposed to be given the Principal Secretary, State Principal Secretary, the Treasury, National Treasury. Is he represented here? Because I can't see him. Is he represented? If not, I was guided by my senior that for the next session, before we go to the next session, we need to break for tea so that the panel team, yes, we go for tea. Is tea ready? Yeah. I'm hearing the tea is not ready. Had been guided, we need to break for tea. But the tea is not ready. So maybe the team that is here, we may start. Are we? Let me check from the schedule who are here. I'll ask. Oh, panel discussion. They are ready. Madam Jogu, I understand you need to be here. I have a problem. You need to tell us how to do it. You need to come here. You are first. Just come and greet me. We are social animals, is it? And before she does, as she does that, I want you to do the same to your neighbor. You turn to one side, then the other side. You tell the person next to you why it's not for you, that they could not have been succeeded. But the biggest contributor for us being here is Allah Almighty. Why not for you, Madam Jogu? Today could not have been a success. Thank you.
Good morning. Thank you for joining us once again of this second day of the Kenya Industrialization Conference 2025. And we are about to get into a panel. As you understand, we needed to do a tea break, but please bear with us. We go straight into a panel, but as per the timetable, we are on schedule. This is the time for the panel, actually. And it's about driving Kenya's industrialization through innovative and accessible financing models. So welcome. With the industrialization agenda, financing has been a major issue, a bone of contention in terms of the structure, the tenure, the model of financing, and even whether it speaks to supporting industrialization in this country, whether it's looking at the supply chain or the value chain approach, or looking at other types of approaches. I will not preempt what our speakers will speak about, but we are very excited to say we have a great panel this morning, and I'll invite them to join us down there. We'll have the panel sitting down there. And our first panelist, I don't know if Nakosti is represented. Nakosti, Director General Dr. David Ngigi, is he represented? Our next panelist is Ms. Dr. Doreen Kimanthi, Acting Managing Director, Kenya Industrial Estates. Please join us. Let's clap for her as she joins us at the front. The next speaker will be Ms. Nora Ratemo, Director General, Kenya Development Corporation. Thank you, Nora. Please let's clap for her as she goes to the front. And then we have NCBA. Is NCBA represented? Yes, thank you so much. Please join us at the podium there. And we have 3 very powerful representation today, and we hope to have an engaging time. Unfortunately, we have an apology from the State Department of Industry, the person in charge of Kenya Jobs and Economic Transformation. But in case he's here, the person in charge of Kenya Jobs and Economic Transformation, just in case, the hall is so big and we don't want to leave anyone behind. If you're already here, prepared to make a presentation, we want to give you an opportunity to share with Kenyans how they should participate in industrialization. So give me 2 minutes to join them also at the podium. Thank you. So thank you once again, good morning. And now as we get into this panel, I'll allow the presenters to introduce themselves, their names, their companies, and just a quick summary of what they do and what the institutions are offering Kenyans before we go to more detailed questions. I'll start with James, who is on my right, first right, from NCBA, to just introduce himself briefly and what the bank is about. Thank you.
Thank you very much, moderator for the morning. My name is James Kariuki Karenga. We've been told to pronounce our names in our mother tongue. I am Deputy Director in charge of Asset Finance and Business Solutions for NCBA. Very excited, first and foremost, to be a partner in this great initiative where we are coming together to discuss issues on industrialization, innovation, and how the private sector from the banking side, like NCBA, can come in. So NCBA is a well-known commercial bank, one of the large banks in this market, offering both financing and investment options for all customers across the East African region. Very excited to just sit in, discuss how do we grow together, how do we innovate together. Thank you very much.
Thank you. Next, I'll invite Kenya Development Corporation, the Director General, Ms. Nora Ratemo, to introduce herself, and KDC.
Thank you, Madam Jogu. So my name is Nora Ratemo. I'm the Director General, Kenya Development Corporation. So Kenya Development Corporation is the premier developmental financial institution fully owned by the government of Kenya. We provide capital to investors within the economy to spur growth in specific sectors. Currently, of course, the discussions that are ongoing this week have been about innovation around manufacturing. So manufacturing is one of the key sectors that we look at. And we look at supporting investors to invest in, of course, sectors that will improve the economy of this country. Manufacturing, agriculture, tourism. We're also looking at new emerging sectors like the blue economy. So we do this by providing concessional finance through two instruments. We either put in debt or we put in equity. And this we make available to local investors, and we also partner with international investors in terms of setting up investments in Kenya. So besides that, we're also now introducing credit guarantees. That is a de-risking instrument that we're able to de-risk so that my colleague here, who's in the private sector, is comfortable to be able to invest or provide you with his private capital once the investment has been fully de-risked. So happy to be here, Madam Jogu, looking forward to quite engaging conversations. I'm sure we've had a lot of deliberations the last 2 days, so would be interested as KDC to definitely continue driving this conversation on manufacturing. Thank you.
Thank you, Ms. Ratemo, and we appreciate your joining us this morning. And next we are going to have Dr. Kimandhi, Acting MD, Kenya Industrial Estates, to also introduce herself and to introduce KIE.
Thank you, Joyce. My name is Doreen Kimathi, Acting MD, Kenya Industrial Estates. Kenya Industrial Estates is a state agency under the State Department for Micro, Small and Medium Enterprises Development under the Ministry of Cooperatives and MSMEs Development. In KIE, we have a mandate to promote industrialization in Kenya, and this we do through a four-product approach. We offer credit to those in the industrial sector. We also do capacity development. We offer linkages both to market and technology, and we also offer workspaces, fit-for-purpose workspaces. We have 37 branches in the country currently, running 34 industrial parks, and in those industrial parks we have over 300 industrial sheds, where various manufacturers are able to set up their businesses, and then from there they are able to initiate their plans. And we are really excited to be part of this discussion this morning, because then we believe Kenya Industrial Estates has a big place in terms of the industrialization agenda in this country. Even as we look at the contribution of manufacturing, then we need institutions like KIE to facilitate and also participate in this agenda. So thank you so much for this, and we are ready to engage.
Thank you, Dr. Kimathi. This morning we want to share a few highlights from the panel side, but also open up to the audience so that we can engage in a better way and address the particular areas that you would like to hear from. So without much ado, I'd like to go back to James, NCBA. Could you shed some light on what are the emerging trends for now in the banking sector, especially private banking, and how that would affect industrialization? Thank you.
Thank you very much, Madam, for that particular question. And yes, we have noted a couple of emerging trends. First and foremost, within the banking sector, touching on innovation. Obviously, the first one is on digital lending and digitization. That is a very recent emerging trend, where literally every bank is able to offer monies on the go. And so these monies are available either on phone, or they are available on websites, or they are available on various platforms. So that's a new innovation. The other innovation that we have seen, and it's giving us a very clear emerging trend, is on tailor-making solutions for every customer. Previously, lending was very traditional. You needed a collateral. You needed to be a bank customer. One other innovation that has clearly emerged is tailor-making solutions for customers. So you begin to hear languages like invoice discounting. You begin to hear languages like factoring. You begin to hear languages like asset-based financing, supply chain financing, and those kind of things. And we can get into the details of those as some of the emerging innovations. The third one is partnering with guarantee providers like AGF, Africa Guarantee Fund, like other DFIs, who provide guarantees so that we can delve into the issue that a lot of manufacturers have, and generally out of SMEs have, which is availability of collateral. So there are a lot of partnerships that are emerging, so that then we can ask ourselves, if you partner with a development partner, are you able then to solution specific customers? The other emerging innovation that I have seen is where we are partnering with universities, we are partnering with various training institutions to vacate the banking space and begin to get into the space of the manufacturers, the space of the business people, and we then ask ourselves, what are the various needs you have in terms of technical capacity, in terms of capacity building? So we are moving into that space. We are also moving into the space of helping our customers, who are also our businesses, to find markets. We are giving them international exposures by organizing for international expos and attending with them. And finally, we are also partnering even with government, so that forums like this The private sector like banks can also be there to be able to just participate and say, what are the more inputs that we can be able to bring on the table in as far as supporting one another is concerned. So what we are now doing is vacating that traditional way of banking and responding to the market as the market is changing. Banks are now very active, even discussing things to do with climate financing, things to do with sustainability, and those other kind of initiatives. So I would want to leave it there, Madam Jogu, and say agility, ability to respond to customer needs, and therefore being on the go and creating solutions is what currently is happening within the NCBA space and generally within the banking sector. Thank you very much.
Thank you, James. I was hoping you would give us one at least solution that NCBA gives or you feel is your competitive advantage over other providers of financial solutions.
So asset-based lending is one financial competitive we are able to give, which is an innovative for manufacturers. We are able to give you financing against your own equipment that you have. It's a very competitive edge that we have where you don't have to have the traditional collateral. So I would say that that is one very innovative solution that we have, where the collateral is the asset itself and you're able to finance you money against it. Even a manufacturing firm, a bakery, a computer setup, whatever it is that you have is one that we're able to do it, and we're able to do that within the shortest time possible. The second innovation that NCBA directly has is in terms of being fully digital, so that we can be efficient and we can be agile. So we talk about being fully digital, where applications are online, and we're able to quickly be able to process facilities for the private sector within 1 to 2 days, and you're able to get your offer letters. So innovation around digitization is the other that we are very clear that NCBA has. Thank you very much.
Thank you, James. Thank you. And you can prepare later to share just one story that can inspire Kenyans on, a success story on how you've supported manufacturers. Just think about it as we go to Ms. Ratemo. Ms. Ratemo, KDC has been known over the years to support long-term investments in this country and strong partnerships in terms of manufacturing and many other sectors. One of the challenges manufacturers have constantly said is that access to long-term capital is a big problem, and there are many factors affecting that. What is KDC doing to support long-term financing and supporting manufacturers and other investors to venture into industrial development? Thank you.
Thank you, Madam Joyce. So Kenya Development Corporation, first of all, I think let me get into the history, because we came about in the year 2020, and this was out of a merger of 3 developmental financial institutions that were created just after independence. And that is ICDC, which was focused on supporting manufacturing. There was Tourism Development Finance Corporation, which was focused on supporting the tourism sector, and we had IDB Capital. So all these 3 financial institutions, which are fully owned by the government, were brought together in the year 2020 to form what is called Kenya Development Corporation. Now, Kenya Development Corporation picks its mandates and its focus from the government's agenda. So we look at what is the government focusing on in terms of driving this economy. And so one of the key agendas of this current government is industrialization. And so KDC has anchored our current strategy in terms of supporting industrialization of this economy. And we all know well that industrialized economies and the effect it has in terms of even the social impact, which is what we are focused on as a developmental financial institution, is quite a mass. By this, we're able to create more jobs, which is a current challenge for our country. By this, we're able to even enhance infrastructure. Current conversations are around energy and support to the manufacturing sector. So there is that effect by which when we provide capital to such sectors, what's the ripple effect that we see? Now, KDC, as I mentioned earlier, provides long-term capital, and we do this through two instruments. So we either provide debt or we provide equity. But we've also gone ahead to realize that the issue with a lot of industrialists is not necessarily only capital. It is also the support that they require in terms of driving policies. I think a few months ago, KDC held a sector forum here where we invited specific players within specific sectors to discuss how would we support you. One of the key challenges we realized was that they really needed a lot of support in terms of advocacy, issues like licensing, issues like business support, business advisory services, where we come in as KDC, we handhold you, we give you the technical support that may require. We may also be able to, also from a financial perspective, look at your governance structures, because remember, businesses is not just about getting the capital and being on the go. It's also about how you manage your day-to-day business. So besides providing this long-term capital, which we do this through debt, and we have different products under debt that we provide. We also provide equity, where we come in, we invest into your business, get shareholding, we can get preferential capital, we can get ordinary capital. They are different. You can take mezzanine debt. So there are different kind of instruments that we use so that we're able to de-risk your investments. And at the right time, because we get into this with the idea of bringing in private capital, and so when we feel that your business has reached the level where you're able now to access my colleague here, James, finance, and you know you have to tick a lot of boxes to access his financing, then we exit. So it is just to prepare and take some of the risks that maybe the private sector would not be willing to take. Besides that, KDC is also doing a lot of resource mobilization, because again, remember, for us to be able to provide these affordable loans, we must also be able to get or access the affordable capital. So we do this by getting into various partnerships which you currently have, like with the Indian Exim Bank. We are currently trying to do one with Saudi Exim. We're also exploring one with Afri-Exim. So we look at different partners within the multilateral developmental financial institution to capitalize KDC, so that we're able to also provide this long-term capital to investors. Besides this, we're also looking at innovative products, and climate change and sustainability is one of the things that I think have been largely talked about, and that's the way to go. As we talk about industrialization, we cannot fail to talk about sustainability and the environment. So we're also looking at an innovative product that we are setting up, which we are calling the Green Fund. So the Green Fund is a fund that we are creating to support manufacturers to go green, to basically get better equipment that are not really emitting much carbon, to look at sectors like the EV, waste management, energy consumption. So we are setting up a fund, and this fund, KDC will be putting in a seed capital of about $40 million, and this is in partnership with the World Bank. Now this fund will be managed by a fund manager, and the fund will go on to invest in terms of equity, because we understand the challenges that investors have. They actually require more long-term capital, capital that is concessional. So we shall be putting in, and what the research that was done, we actually found that a lot of businesses currently actually are so, their debt ceiling is quite high that they cannot be able to afford to take in more debt. So reasons why we are looking at a more innovative product, of which we take in, put in equity into your business, and at a mature time exit out of this. And this is also to look at also stimulating also our NSE, to see as whether we can be able to convince some of these companies to list also in the stock market, so that KDC can be able to exit out of this. That would be one of the routes of exits. So these are some of the things that we are doing to provide long-term capital to investors. Thank you.
Thank you so much. Thank you so much, Ms. Ratemo. Quite a lot of useful information for us to digest and also see. Yes, you can clap for her. Please clap for her. Quite useful information, and we can see people are working behind the scenes. Next is Kenya Industrial Estates, Dr. Doreen Kimanthi. I know you've been known for a long time to support SMEs, either to access working space and also financing. And with that also, there's been the question of affordable credit that SMEs have been asking. And we are wondering how much is KIE doing to support SMEs and most importantly, startup manufacturers?
Thank you, Joyce. You realize Kenya Industrial Estates comes in as an institution ya mashinani after KDZ is up there. So sisi ndio tuko ground as an institution. And so in regards to financing and of course the startup, I want to pick a few points. And as Kenya Industrial Estates, we support the entire manufacturing sector as long as you're doing legal manufacturing and you're within the spectrum of micro, small, and medium enterprises. And for us, we run an integrated business model where we not only give you financial support, and for us, we are only doing debt. My colleague has just mentioned that they are doing both debt and equity. For Kenya Industrial Estates, currently we are doing only debt. And in lending, we say that money should follow skills and not the other way around. And that is why when we come in as Kenya Industrial Estates to support you, then there is the aspect of capacity development that we walk through. And this capacity development is both by KIE, but we also are able to link you up with our clients, those who have gone ahead of you, so that if you're thinking of opening maybe a textile and apparels firm and you need further guidance, then we are able to link you up with someone who has gone ahead of you in that sector. That way it allows for better internalization of the business idea and of course management of growth and sustainability of that firm. And so as KIE, we are able to come in finance, we are able to do the capacity development, we are able to link you within the market to our clients and other partners that we work with. And of course, after all that, then we are also able to give you a loan. And our loans run from a minimum of 100,000 and our maximum limit is 20 million. 20 million because of the sector we are serving, because then we want to create a larger impact within the economy. The other aspect that KIE is doing is a value chain approach, and I know this was mentioned earlier. So we are able to do the mapping and the linking, and an example by the gentleman who spoke first, he spoke about an example of leather, the leather value chain. If you look at the shoe you're wearing this morning, if you count the component, I am sure they will go to about 11, 12 components. So how do we support the entire value chain so that there is no one who is lacking in raw materials? Because you realize the beauty with manufacturing, one company will provide the raw materials for the other. So we are basically the markets within ourselves. So once we do the value chain approach, then we are able to have a greater impact. The other item under KIE, especially our loans, I know as Madam Jogu has mentioned, there is the issue of the terms and conditions. And for KIE, we are currently lending at an interest rate of 10%, which is on a reducing balance. And my colleague from NCBA, I don't know why, I know the reason why he never mentioned is rate. Yeah, and I know it's a conversation that the government has been pushing through the central bank. For Kenya Industrial Estates, we are already there, and we hope with time we could be able to get to a single digit lending. We also have flexible repayment terms. You can pay our loans up to 8 years, especially if you're coming for machinery. And we are also able to offer a grace period of maybe between 3 to 6 months, so that if you're buying machinery, then you are able to allow for probably the assembling, the fabrication of the machine, the delivery, the shipping, the testing, and at least by the time you commence the loan repayment, then you already have a working machine. And of course, we also look at flexible collateralization of our loans. The question on startup came up, and I'm sure those in the House, we are familiar with the startup bill that is currently before the Parliament. And as soon as that is ready and it is signed into law, then in collaboration with other institutions that will be participating in its implementation, KIE is expected to anchor the startup fund. And this startup fund is supposed to take care of especially the youth who have good ideas. They have gone through school, the universities and the TVETs have taken them through various innovations. They can make the many components that we require in the country, but they get out here because of the stringent borrowing, the capital requirement, they are not able to basically exit their ideas beyond beyond their own spaces. And so we expect with the government supporting that and creating that fund, then it will make it extremely favorable, especially for our own young people, to be able to ideate, do the prototypes, pilot their innovations, and also commercialize them. The other thing we are doing as KIA is supporting the graduation of SMEs, especially to the banking sector, who have bigger resources to support the growth of the sector. And for us, we are basically a catalytic fund. And we are looking at that by supporting the formalization. And that's why when you come to us, any loan beyond 500,000, you must have a registered business. And now we are moving away from just a certificate to even formalizing the operations. Because most of the business, yes, we have a certificate, but when you look at the real operations, especially the micro, small, and medium enterprises sector, we are still operating not in a very formal way, such that if I am the owner, manager today, and I'm not there, then the business closes for that day because I am the only one. How do we formalize? How do we build systems to ensure that there is continuity? Because that gives assurance to any financial or any person who is coming in to support. Finally, I want to mention that we are in the process of expanding our product offering to take care of emerging needs, and we are looking at the area of leasing, contract manufacturing, trade finance, and also smart manufacturing, so that then, as my colleagues mentioned earlier, how do we manufacture, how do we produce sustainably? And all this KIA is doing as a government institution. The main aim is about jobs creation. How do we support the government in the area of jobs creation, wealth creation, and of course looking at the many other benefits that comes with own production. Thank you so much.
Thank you so much. A big hand clap for Dr. Doreen. Quite informative, and also emerging products that you've mentioned. I know we've been discussing new policies like the startup bill, we have the contract manufacturing policy, but now you're bringing supporting financial instruments to make sure that we move forward, and I appreciate that. So we'll have just one round of a success story that you wish to share with our audience, and thereafter we go to Q&A. Very briefly, James, NCBA.
Thank you very much, our moderator for the morning. So I want to share two success stories. And first and foremost, I want to state that obviously, being a commercial bank, and together with our digital lending, I'm serving over 50 million of transactions on a very frequent basis. We have touched very many lives. Within the bank itself, we have seen our customers. As Madam from KIE has indicated, we've seen customers grow from very small SMEs to very large manufacturers. I will beg not to give the exact names, but one of the areas that we have focused on is the area of supporting guys who are into maize milling. And we are quite big at it, maize milling companies. because it's one industry we have established that you can actually be able to start with one line of manufacturing. Like one of our customers based in Kirinyaga County started with one line of milling that costed about 5 million worth of investment. That particular plant formed the collateral on a rental building in a shop. They were packing that milk using their own hands. The employees were less than 10 when we started a couple of years ago. So we were able to study their business model and see that there was potential in it. So we funded that particular plant, and then we also supported them with something that was mentioned this morning called capacity building and linking them with the marketplace. So we are talking about a business that started as a small business on a rented building, doing hard packing of maize meal, and eventually we were able to help them acquire one truck. And over the years, we have seen them expand their geographical distribution. Today we are talking about a company that has a fleet of vehicles that they use for distributing the maize meal they have packed. Today we are talking about people who are operating from their own premises. So we help them build up that place. We took a legal charge of that property. We helped them build a factory. Now we are talking about a major employer with over 100 employees and someone that is impacting our economy and really changing lives within that particular region. We've supported people who are doing island sheet manufacturing. They start on Mombasa Road in very small go-downs, and with continued financial banking, very flexible loan repayment terms, grace period, so that when you set the company up, you give them some bit of grace period, say 3 months to 6 months, to help them settle and start their operations. Then you back them up with a fairly extended repayment period. I have seen those companies become large distributors in this company, and the examples are many within the company. So 2 things that I want to respond to. One is that yes, we are a commercial bank, and commercial bank obviously will pay attention to credit risk. They'll pay attention to your ability to repay the facilities, but we walk the journey with customers to build them up. Number 2 is that we have then, as I highlighted in the beginning, we're able to move away from just lending to supporting you succeed, because when you win, we win, and everybody wins together. And so I'm here on behalf of the bank to say to any manufacturer that in case you have a plan, you have a business need, please feel free to visit us. We are in 100 branches across this country. We are also in Uganda, in Tanzania, and in Rwanda. And we are willing to have a conversation that can change any manufacturer's business and grow it forward. Thank you very much for listening to us this morning. We look forward to interacting more, to hearing feedback, and building up more innovative ideas together. Asante.
Thank you. Thank you. A big hand clap for James, NCBA. Isn't that a big story? From less than 10 employees to 100 employees and still growing. Thank you for that story. People want to hear real stories. You know, sometimes we say big words and, you know, the audience wonders, okay, where is at least one single story that we can run with? Thank you so much. Let's clap for NCBA. We have Ms. Nora Ratemo, who can also share a success story, whether recent or old, just something that can, you know, give that tangible, you know, story or vision of what exactly is KDC doing. Thank you.
Thank you very much, Madam Jogu. So one of KDC's, there are several success stories. I think we've been able to impact several investors in this economy, and we've seen them scale up. But I think one of the pet projects, I call it one of my pet projects that I have seen it grow and I'm very proud of, is one small startup that is a mango processing company. The company started off by, first of all, extending the shelf life of mangoes for purposes of export. It then grew, and I think for KDC, first of all, let me clarify, as my colleague here said, For us, we start off with loans from 10 million, especially those in manufacturing and above. So basically, after you've been incubated by KIE and are ready now for expansion, we now take you up, or you're at a scalable level, we now take you up. But equally, we start off with startups that are also dreaming big. And before we set this cap, we used to finance from anything between 1 million and above. We finance up to 500 million Kenya shillings. Now, this startup started off with a very small loan of around Kenya shillings 10 million, of which they were just extending the shelf life of mangoes for purposes of exports. We've supported them. They went into manufacturing. And did a lot of innovation around that, and now they are producing fruit, what are they calling it? Fruit snacks, actually, yes, fruit snacks. They are now producing fruit snacks, which they are distributing in supermarkets, in schools. Initially, they started off with mangoes. They've enhanced this to beyond mangoes. They are now into, and you see, that is the beauty about KDC, is that we will be patient with you. So you realize that mangoes were seasonal, and so the conversations we had with this customer was that with mangoes being seasonal and you being in debt, you therefore need to expand your products so that you're able to have financial flow all through the year. So this customer had to go ahead and think beyond mangoes and look at other fruits. There's passion fruits and different fruits within which our agriculture value chain is producing, and now is producing, has gone ahead now to do value addition, and that is what I think we are supporting, and the government has been advocating for, in which we should go ahead now and do more value addition, so we are not exporting raw. So this specific projects, the customer has now gone ahead to do the snacks, which they're also exporting actually. The snacks are being consumed now by various airlines. You travel in different airlines, you'll get a fruit snack, you'll get a snack that even now has vegetables in it and different fruits which have now been processed. So we've seen this customer grow, and we are quite impressed, and we've walked the journey. So they're able to repay their loan. And one thing I tell businesses is, yes, there'll be seasons, and we all felt that season during COVID when we're all impacted. And so as a lender, you walk the journey. We are not only with you during the good times when you can pay, but we're also with you during the hard times when your businesses are struggling. We have various support. We can restructure the facility, we can recapitalize you, but you have to present yourself to us. You have to make us aware of what challenges you're facing. Otherwise, then we have a strained relationship where we go into recovery. Another successful project that we've had is within the steel sector. We've been able to support a steel company that went off to start from producing scrap metal, took advantage of the Indian line, and now they are quite big manufacturers for us. In fact, now we do co-financing with the banks actually, and we've seen how they've grown into, I think it was a company that started with around 20 employees. They are now at around 500 employees. They've expanded their manufacturing plant. They've been able to even attract partners like IFC who've come on board as equity partners. So, and this is the beauty about also just not looking about a capital requirement, but equally also having proper governance structures. Because you not only get local investors, you can also get multilateral investors coming on board, as long as they also feel that the investments will be properly managed. Now, that is on the debt side. On the equity side, KDC has been known over the years to support businesses by putting in equity and therefore exiting. Our exit, of course, strategy is governed by the Privatization Act, but we've been able to do a lot of investments around equity that have now become very big companies for us. There are times we look back and say, the ones who originated and supported this idea all the way from ideation to seeing it to fruition, quite had a vision. So one of the successful companies, and I can see the one of our sponsors here is Isuzu. Isuzu is one of the companies that we've put in equity. We are shareholders in Isuzu. Then it was known as GM Motors, and we've seen it grow. It's reached a point where it's quite mature, and eventually, as KDC, what we're looking at is exiting. Besides Isuzu, there are also several bottling companies that we've invested in. We've also invested in a wine agency company. We've invested in the hotel sector. So we've provided equity capital. And besides that, we're in pharmaceutical. We've invested with a few companies in the pharmaceutical sector that are still growing. And our hope is that in another few years, they'll be ready for us to exit. They'll be mature, ready for private sector capital. So I think those are some of the success stories, and now, based on the new product that you want to roll out in the market, which now we are looking at climate change. I think mine is now to encourage a lot of those who are here to think green. And as you think green, we are a partner that are available with concessional funding. But equally, again, for us to even access this money is that we also need to see what the demand is. And at times, sessions like this are quite good, because then we're able to pick as a developmental financial institution that this gap exists, that my colleague here at NCBA is not able to fund, and government then can step in and look at it. So climate is one of the areas that we are keen on growing as an economy, and as KDC, we have a fund that is going to support those who are looking at going green in terms of their businesses, and it will be an equity fund as long as you meet the requirements of what the fund management company will want. Then I think we'll be able to go ahead and support. And we're looking at minimum returns. We are not coming here to pull out all your profits. We leave your company better. We strengthen you also as a company, because besides just coming in with the capital, we also come in with the governance structures. We support you in terms of technology. So these are also opportunities that are available to those in the room. Thank you.
Thank you so much. Let's clap for her. Quite success stories from startups to large ones. Looking at financing options, investment options, and even how you can scale your partners in terms of financing is very interesting. Thank you for that opportunity. Also, James explained how you can graduate from one partner to another or integrate some of these partnerships just to scale your investments. Thank you. Finally, we want to listen to Dr. Doreen briefly. I don't know why I'm curious about working space. I know you want to talk about financing, but give us a story that of somebody who, even working space, you supported them to have, plus financing, markets, and all that. So how do we get that integrated approach? Dr. Doreen, thank you.
Thank you, Madam Joyce. As I mentioned, for us, we deal with the micro, small, and medium enterprises. And so we have that role to nurture and basically empower and accelerate the growth of these small enterprises. And as my colleagues have been speaking, I was wondering which is the success story to give, because I have so many. And because I have so many, I want to invite us to to the Kenya Industrial Estates social handles, both the Twitter, the Facebook, and all of them. If you go to any of our handles today, you will see many of our success stories. We've done a documentary on quite a number of our customers, and you will see what they have been able to do, where we've been able to grow them from, and it will give you a very good perspective of what Kenya Industrial Estates has been able to achieve. I've been asked to speak about one that we've incubated, we've financed, we've linked to market, and I have a very good one in mind, who I know is a very big member of CAM, but with your permission, I'll not mention the name, but I know you know who I'm talking about. And this is a company that started small. They have been with us in industrial area for very many years, doing packaging materials. I'm sure when I speak about the sector already, Joyce knows who I'm speaking about. not a while ago graduated also to beauty sector. You see the way she's nodding, eh? She knows who we are speaking about. And I am sure we have felt the impact of this company in this country, currently employing over 300 people, continuing to grow. The other day I had a session with the entrepreneur, and they mentioned that they now want to move to another sector, the spices, just for production, processing and export. So indeed for Kenya Industrial Estates, our success stories are many, extremely many, and that's why I'm inviting us. Please visit our social handles, and you'll be able to see from agro-processing to building and construction materials to printing and beauty sector, all the sectors, because as I mentioned when we were starting, KIA, we do not discriminate which sector. As long as you're doing illegal manufacturing, then we are able to support you. I pray that we are already looking for the KIA social media handles, all of us in the room, just to have a glimpse of the success stories that we have.
Thank you. Thank you. Let's clap for KIE and for Doreen. She's saying the stories are too many. I hope you're one of those people who can be counted enjoying those stories. So I want to open this to the floor. It's meant to be a dialogue, but just one round of questions actually, because of time. So who's supporting? Thank you. We have one question on this side, two on that side. At least every row except this one has a question. And you say who you're addressing your question to. Please keep it brief and one question only.
Okay. Thank you so much. My name is Kennedy Hakaba. I'm a team leader at Ahadi Governance and Research Consultant, where we do a lot of consultant research and training. Allow me to define the word physical space. Physical space is an office with chairs and tables. Currently, as the emerging industries, sometimes you actually don't need the physical office. So maybe some of us, we have been tapped out of the financial space because of lack of that physical office. Sometimes young people who are here, an office could mean a laptop and himself and another person. And that's how he earns the living. So I think the financial institution, I was talking to one of the director of an institution, and in their form, it's very clear. When they are coming to certify you, you must show an office. I don't think many people have an office in the gig economy that Hustler government is working on. Let me just finish. Number two, I was talking to one of my friends who does graphics, and he says in the next few months he might be out of business because AI has just wiped almost all the sector. I was just wondering, is it too early for government to maybe to conduct a baseline study on how the AI has impacted the industrialization in this country and see how do you mitigate, because we have to embrace it. That's what we're being told. But is it, yeah, even in the knowledge space where I am, at this time when the workload is a bit low, we'll be doing bids, proposals, but you see now the AI has picked part of those jobs. So I don't know, maybe for your thought. And then
sorry, who are you addressing the question to? And we said only one because we don't have
yes. So let me stop there.
Yes.
I'm sure I addressed government officers who are here. I'm avoiding talking about Hustler Fund because I look like I'm criticizing government. Government is an ally, so.
Thank you. Yeah. Thank you. We had another question on this side, this row, and then this other one too.
Yes, thank you so much. Very enriching panel. My name is Tony Blair Onyango. I'm a student at the Technical University of Kenya, pursuing electrical and electronics engineering, majoring in telecommunications and electroacoustics. Now, my question goes to Ms. Nora, and I just wanted to ask whether we can explore a pilot partnership with your corporation. With our upcoming company, we intend to manufacture pellets from recycled plastic and bamboo. because we understand that we have a lot of bamboo in our country, and also the plastic part, not just in terms of financing, but also in the areas of advocacy, and maybe also linking us up with other people in the manufacturing space. Thank you so much.
Thank you, Tony Blair. And this other row, there are 3 questions on this side. 2 here and 1 up. Don't know if the others.
So I think this guy captured my question about AI, so I won't delve into that. I just say what I do. From UNICEF, Ufanisi Network for Innovation and Social Enterprise Development. We do what one or two you guys are doing, but we're doing it in a different way. I think you mentioned AI. I think it's taking over everything, and we're not discussing these things. We are ignoring AI, but it's taking over everything. So it's a question that everybody should be able to answer. The government, private sector, AI is taking over, isn't it? It is taking over industries, value chain, everything. Where are we? Where are we in Kenya? Huh? We need to ask those questions. We need to ask those questions. What are we doing with this AI? No? Okay.
Thank you. Next to him, there's
Good morning. My name is Ruth Michoma. I run a company called Rosebe NGSS Limited under People Living Disability. My question is one thing. I thank the panelists, ladies. This is really a calling for women empowerment that you are doing a great job. Straight to my question to Madam Maureen for KIE. Where do we lie as people living disability if we want to be incubated to come in as big manufacturers, then we move to KDC? So maybe we can have a meeting with you as we go further on PWDs, on incubation to become investors who are going to be to move to KDE and the MSMEs. Thank you.
Thank you. We have another one up there, just next to second row, the next row. I hope anyone who wanted to ask a question has had an opportunity. Say who you're addressing your question to.
I'm addressing my question to KDC. My name is Ruth Morara. I own a company known as Gradian Limited. This is a manufacturing company. My question is, we have taken loans from commercial banks and the interest is quite high. We are asking, are you able to buy these loans and help the SME restructure and grow again? Thank you.
Thank you so much. We can go straight to the panel to respond to the questions, and then we can break for tea, and I'm sure you can continue engaging while we're out there networking. Thank you very much. We can start. Who wants to start? All right, KDC. Ms.
Okay.
Ratemo.
Thank you very much. I think I'll go straight first before I address the general one on AI to Tony Blair. Tony, yes. Actually, one of the things that KDC does is every year we look at innovative projects which we assist in terms of doing the feasibility study, in terms of getting you business ready and market ready. And so in our business advisory segment, we target to do at least 2 innovative products or 2 innovative projects each year. At times we do a call out of these innovative products, or at times we, out of the pipeline that we have, we review. So you can make a submission to us. We can look at it. We can support you if you've done the feasibility study. You have a route to market in terms of how you're going to now commercialize what you're producing. We can assist. We can assist in resource mobilization also from an advisory angle. And by resource mobilization, if KDC cannot invest directly, there are various funds available, government funds that are also available for innovators within specific sectors. we can assist in linking it. And of course, if you're ready for incubation or require incubation, my colleague is right here. So I think just walk over to our offices. We're just right here to Chumi House, 17th floor. We can be able to engage and have a conversation. We also have a desk here, so please engage with my business officers and they'll be able to see if this is a project that we can work together with you. To Madam Ruth, on your question on manufacturing, yes, we are understanding the pain that a lot of business people are experiencing in terms of commercial loans and the high interest rates and the short repayment periods. However, I think I need to define what a developmental financial institution is for you to understand. One, ours is impact financing. So basically, our money is invested in businesses so that we're able to create impact. So we're either creating jobs, we're either enhancing infrastructure, contribution to the GDP. Now, what happens is that for institutions like us, we say that we don't buy off loans. Why? Because there is no immediate impact. You'll note there will be no immediate impact into the economy based on us just buying off a loan. The impact will only be to your business, but there will be no social impact because the business already exists. You probably have already this number of employees, you're already in manufacturing, but however, if the business is actually struggling and would require recapitalization, then we can be able to recapitalize you so that we get you into a revenue generating position that you can service both the commercial loan and our loans. But a straight buy-off, that wouldn't be impactful into our economy, would not be able to create additional jobs, because that is what we want to demonstrate, that for every shilling we put into a business, these are the number of new jobs that we were able to create. This is the kind of impact that we had. So, but we can have a conversation around it and see how to assist. We can assist in recapitalizing. If there is expansion, we can look at also expanding you so that you're able to get to a position where you are able to, because we do co-financing. So what happens is that then we agree with the other lender on, okay, we are putting in this money. Can you give the customer, say, a moratorium to be able to expand their business? And can we see how to restructure the non-performing loan on the other side of the commercial entity as KDC puts in their money so that your business is able to get back into its feet, but not a straight buy-off. Now, on AI, yes, AI is impacting everything, and we would be ignorant, especially in industrialization, if we are not taking advantage of AI. But I think government has taken quite good steps to look at this. There's the national AI strategy that is being currently developed. There are various legislation and regulation, because remember, again, it also comes with its own risks, as one of I didn't quite get his name, apologies, has mentioned. It also has the risks that it comes with, so of course it needs to be regulated. But now KDC is also looking at digital and the creative economy. We actually have been inviting the young people within this space to engage us, because we are trying to create a product to support the digital and creatives, and to see how we can enhance more businesses. So those even who are operating from laptops, and those who are creating apps, and all those who can make use of this AI, I think this is a good opportunity for us. It's one of our sectors of focus. We'll soon be rolling out a product for this specific sector of the economy. And so those who are in this specific space, please engage my team so that they can give you more details in terms of the current products that we are developing. And at this stage, we can develop this product and see whether it speaks to you and whether it's tailor-made for this specific sector. Thank you.
Thank you so much, Ms. Ratemo. So what are the opportunities, risks, and regulatory environment for some of the areas that have been mentioned, specifically AI? But we want to assure Kenyans that AI is there, it's a global issue, and it's an opportunity. We need not be afraid. We need to embrace it and see how we can regulate it so that it can create a fair playing field, but also improve our productivity and our knowledge economy. I wish to also invite Doreen. Quite a lot was said, and then James. Thank you.
Thank you. Just to add to what my colleague has mentioned, is that the government is actually really focused on the area of creative economy, especially because of our youth. And it is an interesting conversation that is going on, and I am sure we should be able to engage as time goes by and as everything gets firmed up. I have personally sat in meetings where those discussions are going on, because then if you're thinking about supporting our young people, and we are in the tech era, it is not an area we can be able to ignore, whether it is in terms of creatives, in terms of use and application of AI, and the entire spectrum of the tech sector. The question was on the special group, the persons with disabilities. And yes, I agree, we need to have a meeting so that we can see how we can further that conversation, just to understand what you're doing, where you're at, and what would be the areas of support, so that then we are able to move together. So we can talk after this, and then we see how to further that. Thank you.
Thank you, James. As you give the parting shot, we close the session. James.
Excellent. So I want to first thank the organizers of this conference for having us here to discuss issues on innovations around financing and specific to the manufacturing sector, and also to incorporate the SMEs and everybody involved. I want to first just respond to Kennedy a little bit and say the banking sector, and specific to NCBA, we are able to finance you even if you don't have a physical office, because we are reacting to the changes in the current world. We've given people financing who operate from their homes. They have come and acquired trucks for business, for example, they operate from their laptops. The creative industry, as has been mentioned, is another area where we have been able to finance. The second thing as I wrap up is I want to demystify the issue of interest rates. Commercial banks are always accused of high interest rates. And the point that is always looked at is affordability versus the investment that you're putting yourself into. And our regulator, because we are a highly regulated industry, has now introduced something that is called asset financing model, which is a corroborative effort to make sure that we run our business in a competitive manner, but also make sure that the interest rates are able to stir the economy to grow. Currently, we are talking about a range of between 14 to 16% being the interest rates per annum on a reducing basis that commercial banks, and specifically NCBA, is offering. And we have seen serious appetite around it. Today in the morning, we were discussing that actually nowadays, because the investments are growing a little bit more, that people are willing to invest in businesses as opposed to money market fund. And therefore, you might realize that there is less vibrancy within the money market fund, but there is an opportunity to invest in business because that is stirring growth. My final point is to just invite you to spend time with bankers. We have a tent around, we have branches all over this country. Please spend a bit of time with us and just sharing what it is, the innovative idea you have, even if it is a startup idea, even if it's an incubation that you want us to discuss. And then specific to you, we can tailor-make a solution that will stir you. The purpose of our bank, and specific to NCBA, is to see individuals grow into businesses, businesses grow in corporations, and thereby having significant impact within our economy, creating employment, and making sure that there is growth. Thank you so much for having NCBA on this forum. We look forward to hearing more from you. Asante.
Thank you. Let's have a big hand clap for our panelists. We've heard James Kiranga from NCBA, Deputy Director, Asset Finance and Business Solutions. We've also had the Managing Director, Kenya Development Council, Ms. Nora Ratemo. A big clap for her as well. And finally, we had Dr. Doreen Kimanthi, the Acting Managing Director for Kenya Industrial Estates. Let's appreciate their time. And from here, we'll have a short photo session and gifting. And please take time to go and see the exhibitions. You've heard the NCBA is represented, KDC has a stand, KIE has a stand. You'll get more information as you also experience some of the Kenyan products at the exhibition. Thank you very much. And I have been your moderator, Joyce Njogu from the Kenya Association of Manufacturers, Head of Consulting and Sustainability. Thank you.
At the heart of Kenya's industrialization agenda lies a new vision, County Aggregation and Industrial Parks, KIPES. These parks aim to transform agriculture through value addition, aggregation and rural manufacturing.
Tumeweka katika budget yetu bilioni 4.7 ya national government and another 4.7 billion ya county government, kwa sababu hii County Aggregation Industrial Park ni ya muhimu kwa wakulima, kwa sababu hapa ndio tutakusanya mazao yetu.
The first step towards manufacturing is aggregation of products for industrial purposes. And that's
At the heart of Kenya's industrialization agenda lies a new vision, County Aggregation and Industrial Parks, KIPES.
Please, let's break for tea. 15 minutes. So once 15 minutes is over, I'll call the sitting to order. Karibuni.
At the heart of Kenya's industrialization agenda lies a new vision, County Aggregation and Industrial Parks, KIPES. These parks aim to transform agriculture through value addition, aggregation and rural manufacturing.
Tumeweka katika budget yetu bilioni 4.7 ya national government and another 4.7 billion ya county government, kwa sababu hii County Aggregation Industrial Park ni ya muhimu kwa wakulima, kwa sababu hapa ndio tutakusanya mazao yetu.
the first step towards manufacturing is aggregation of products for industrial purposes. And that's why we have the KIPES program.
For decades, our farmers have carried the weight of feeding the nation, yet their gains were often cut short by middlemen, poor infrastructure and lack of markets.
Hapa broker ni wengi, wametoka na wengine Nairobi, Nakuru, Mombasa, kuna wale wanapeleka pande za Marsabit huko. Wale broker wanakuja wakitaka labda kidogo kidogo, mtu anataka truck 1, 2, 5 hivyo. So hamtaweza kuuza vizuri kama kikundi.
2020 miraa ilianza kudeteriorate. Biashara ikaanza kwenda chini. Soko ya miraa ikaanza kupotea. Sasa mpaka miraa ikawa sasa ni kama haiwezi saidia.
Mimi ni muuzaji wa nyanya hapa Kagio. Hii ndio soko yetu ya nyanya. Sasa hii nyanya imekuwa mingi. Tunakosa kwa kuuza.
Ile sinda tuko nayo ni kwa kuuza. Hatuna bei ya kuuza tuzuri. Tunatafuta huyu, kunakuja broker, inakuja inakudanganya, ikupatii pesa mzuri.
The national and county governments have constructed these parks designed to give farmers the power to process, package, and profit from their produce.
The plan in the initial years was to create 18 county aggregation and industrial parks. Currently, as we speak, about 13 of them and more than 80% complete.
With aggregation taking place, and we have a place where we can store them so that they don't ripen quickly, we are able then to look for market taking slightly longer than normal. We also will be able to have a bargaining power when we have collected all the fruits from all the farmers and putting them together, not to mention that value addition that can happen from this.
Beyond traditional farming, the KIPES also open doors for innovation, from universities developing new Mira-based products to youth learning hands-on skills in processing and packaging. The parks are becoming hubs of creativity. They are not just for farmers, they are incubators for the next generation of agro-entrepreneurs.
What we do here is we add value to our traditional millets, mwere in our local language, and also the sorghum. We pop the millet, then we add flavors. We use the natural flavors, that is mangoes, turmeric, ginger, honey, bananas, and cinnamon to make a very yummy healthy snack.
We are doing the value addition of Mira so that we prolong the shelf life and also the value of the product. And also we are changing the way of taking, apart from the chewing. Now you can move from chewing to other ways.
Mira is highly perishable, therefore KIPES comes in handy so that we can have it stored there or processed there so that we can hand value.
As much as we are agricultural producing, you will notice that we have diversified our value chains, and we are working towards ensuring that we are moving to the next step of value addition, again providing employment for our young people and then increasing the income that our farmers are getting and creating jobs.
I would like the national government to invest in value addition more than any other activities, because this is the way to go. This one we are going to create employment. Like now, myself, I'm in the process of recruiting like 10 people. Yes, 10 young people additional, apart from the ones we have.
So we are happy as a county government to promote our farmers and ensuring that our produce reaches the right market and that our farmers benefit from the right pricing, and that we also ensure that we are cutting off brokers who reduce greatly the money that comes back to our farmers.
As we step into operationalizing the KIPES, farmers too continue to team into cooperatives. This will ensure they reap maximally from pooling their crops, demanding the right pay while ensuring all-year processing for the packs.
I belong to Ndia Avocado Farmers Cooperative Society, which has teamed up or joined with Kirinyaga Avocado Growers.
Tunajaribu wakulima wakuje pamoja, wakuwa wanauza pamoja ili kuna uhakika wa volumes, kwa sababu wakati watu wanauza wakiwa pamoja, uko sure volumes zitakuwa sawa, ndio mnauza one product na mnauza mahali moja.
These KIPES also provide cooling, aggregation and sorting facilities, for without storage, processing in stable markets, farmers lose.
In the past, if you wanted to set up an industry, the first thing you needed is to look for land. Then you have to change that land from agricultural to industrial use. Then you have to bring electricity individually. You have to bring water. You have to look for solid waste management. You have to look for security. So it became impossible. But now, the government has removed that entire load on you. So all they are saying, come take up a lease as a cooperative, as an individual, as a group, and we'll be able to provide you with a shelter and everything that you require.
We are working very closely with Department of Agriculture to make sure we improve on production, quantity and quality. So we've been giving out seedlings, especially avocado and macadamia seedlings, so that we have more farmers farming this important crop that will help us increase our quantities for our kipe as well as other industries within the county.
The parks are more than just buildings. They are seeds of transformation, jobs, security, innovation, and industrial growth to ensure more money in the pocket for Kenyans.
This is probably the closest we have been as a nation in terms of actualizing our industrial agenda.
Your products have markets in the US. They are in high demand. I'm one of those small business owners there. We love products from Africa because we know they are organic.
In total, we have about 58 expression of interest, and people are looking at different areas to invest, including agro-processing, light industries, and even some in the export processing zone where they want to export their products.
Anchored on the bottom-up economic transformational agenda, this model seeks to transform the country into an industrialized middle-income country through establishment of these aggregation centers.
We must rise to the occasion. We must summon the courage to change our country and our continent. We can no longer have excuses. I am persuaded more than ever that with resolve, unity, and bold leadership, Kenya is firmly on the path to true transformation.
From miraa in Meru to tomatoes in Kirinyaga and macadamia in Embu, farmers now stand at the dawn of a new era. With aggregation and value addition, the KIPES are a reality to turn agriculture into prosperity for farmers, for counties, and for Kenya.
Hi, my name is Leah Wario Muniu. The company name is Wario Gypsum Limited. We are involved in the manufacture of dustless chalk, the chalk that is used in schools, the teachers use to write on the board. The chalk is not locally produced. All the chalk we use in Kenya is imported, so I saw this as a gap in the market. I have learned a lot of things during the KIEP training. The processes I used before to make my chalk, I found that they were sort of rudimentary because I did not have the chemical background or knowing the physical properties of it. So this has helped me more in knowing the chemical properties of all the products that I use. It's more technical, a lot of chemistry involved. Now I get to really understand my product and how best to improve, how best to make the product better and also child safe, because the product I'm using is used by both kids and also teachers. So I must make sure that the product is kid safe and it doesn't harm them in any way. So this has really opened my eye in learning the correct ways of doing things. I not only want to continue making chalk, I want to make other products like plasticine and Play-Doh, the material that is used for the kids to play with, the hand playing. I also want to venture more into the gypsum space, though that is a completely different sector. But in due time, I think since we have gypsum in the country, it is something that it can be explored. And since we are building eco-friendly buildings and a lot of housing projects, so gypsum is a future for us.
So that's why the company name is Waria Gypsum Limited. So I am really appreciative. This is knowledge that I cannot get from anywhere else apart from here, unless now I plan on traveling to China or Indonesia to get this knowledge. So I'm really appreciative of the fact that we can get this knowledge locally. So, asante.
My name is Samuel Wambo Kemani. I come from Kikuyu, Sigona Ward. My enterprise is Oyaka Gashodi Mirrors Women Group. I have been in the animal feeds formulation cohort, and one of the major interests that drew me to animal feeds formulation is because I've been in the field of training farmers, especially crop and dairy farmers. And in Sigona, we had a challenge of proper feeding from the farmers as the feedback. They don't know how to feed their cows well, they don't know the correct feeds. And from that ground, I chose to come for the animal feeds formulation training. And we chose feeds formulation because we have a larger market, we have a potential of farmers within our ward. Basically, from the statistics, we have more than 2,000 farmers in our area. And that is a huge area that we can look into. That is a higher potential for the group. So we chose feeds formulation so that we can have good quality feeds for our farmers. And from that, we hope and look forward to more productivity. As for the animal feeds training that we have undergone here at KLD, one thing that has cropped up is about the feeds formulation, especially the computerized feeds formulation. That one we look forward to using it and utilizing it in our enterprise in the feeds industry, because initially what we used to do is just follow a simple formulation that we're not sure of whether it meets the nutrients level or the standard that the animals need. So basically from the training, one key thing is that we have learned how to formulate quality feeds that meet the nutrients need of the animals. Appreciation to the World Bank Group, Ministry of Investments, Trade and Industry, and also to KLD, KIEP, for the opportunity that you have given to us. As the trainees of cohort 5, especially the feeds formulation side, we are really appreciative for the opportunity, for the knowledge and skills impacted onto us, and we will look forward to using it to grow more of our farmers back at home, investing it in the feed industry, and producing standard feeds that will help increase productivity and profitability of our farmers. Thank you so much.
Hi, my name is Lois Ngonyo Ngede. I represent a company called Amazing Yummies. I'm so grateful I was part of the KLD organizational institution that sponsored us to come here at KLD and do what we know best. And for me, it's I deal with dates, mostly anything to do with dates. I have quite a number of products, but for this particular project, I was doing energy bars. So my energy bar it's gluten-free, totally healthy snack that can be snacked by any person, whether you're vegan, even a child can snack on this energy bar, because it's totally, every product here or every ingredient that I've used is totally healthy. So I welcome each and every person to come and enjoy my amazing energy bar with dates. So thank you, Kiep, for this opportunity, and I also pray that others would get the same opportunity. Thank you.
My name is Maureen Wamboi Mokami. I run a company called Silky Gold Enterprises. At Silky Gold, we focus on manufacturing of household liquid detergents and a bath and shower gel for adults and children. What inspired me to start my business is I'm passionate about cleaning, and I wanted to come up with a product that is easily accessible in the market, that is sustainable, and that is safe to use in every household. Saved under this project, I have been able to come up with better formulations and improve the quality of my products. I've also been able to accelerate my production using their facilities, and I have also been able to penetrate the market after getting the standardization mark from the Kenya Bureau of Standards. The challenge I have faced as an SME is that my business is capital intensive. It requires a lot of capital input for machinery, for production, sourcing of quality raw materials and packaging. Kildi has helped me with incubation. So in the meantime, I'm able to use their facilities for common and bulk production. They have also assisted me in getting good quality raw materials that are affordable and readily available in the market, and referring me to places where I can get good packaging for my products. Having been accredited by the Kenya Bureau of Standards, now I am able to penetrate the market through intense marketing. I'm also going to work on improving my formulations, product development with the already existing products that I have. And I'm going to come up with other products in the course of time. And also my advice to every woman entrepreneur out there is ready market for each and every one of us. So do not be afraid to start, and even start small.
My name is Amos Kitonga Jagi. I come from Tharaka County. I'm the founder and director of Wamam's Flour Limited. I'm very much happy for the opportunity I've been given by the kid for training on how to process and manufacture quality banana flour and cassava flour. So far, for the last 1.5 days I've been here, I'm very much happy because of the induction. Actually, congratulations for your staff. The first day you welcomed us properly. The induction was perfect. Today is another amazing day whereby we have learned a lot. What I never knew about how to prepare banana and how to prepare cassava before it goes to the drying system. Actually, because although we had started making it in our factory, I have come to realize that we were making so many mistakes. Because at the end of the day, when you are taking the flour to the dryer, the unfinished, the raw cassava or the banana, when it is sliced, by the time you are taking it to the dryer, you mean that it is already black. So that's one of the mistakes that we used to do. Today, I'm surprised to see that you have done the technology of how to prepare and peel, the methodology of peeling, the methodology of cleaning, the methodology of slicing so that it can dry faster to shorten the period of drying. So this is a very interesting topic that I have learned today. And like now you can see now we have just finished, this is the rice today. We are finishing of cassava, and it has taken a very short time because the sieve and the system that we are using to make them, they are very easy. From here, actually, my target is actually the way I've come to learn this industry. My target is that now to make sure that when I bow back to my industry, I want to target quality production of banana and cassava flour, whereby I will be able to reach people in the society to save them in terms of food security purposes now, in terms of health of the people.
My name is Hope Wanjira. I'm a founder of H&L Bakery. Today I learned a little bit about nut production and processing. So we're able to do value addition on these cashew nuts. We did honey-coated cashew nuts and we did spiced cashew nuts. I love that I was taught hygienic procedures to observe when I'm doing production of nut processes. And I love that I got to interact with machines and different gadgets that are used to ensure that we get beautiful products to people out there. I'd like to appreciate the KEEP and Kirdi team that have taken their time to train us to be able to grow and scale up our businesses, teaching us new methods of doing things. I learned so many new things today because I never knew how to roast cashew nuts and how to do different value additions on them. And I'm glad that I'm able to do this and introduce a new product into my business that will enable me to grow my business and to scale up by doing different products that are able to do amazing things for the market in terms of nutritional value of nuts.
My name is Paul Njoroge. I'm the CEO and founder of Kenya Industries. We have been given the technical training here at Kirdi through the KEEP program and World Bank. I was a beneficiary whereby we got to be trained to manufacture several detergents and cosmetics. Here on the display are just shower gels, which have also been KEBS approved. And through the assistance, I've been able to get the KEBS standardization mark for my shower gel, bar soap, air fresheners, and other assorted products. I'd like to thank the technical team here at Kirby, especially the chemical department. So through their guidance, we have been able to get all my KEBS mark, that is the standardization marks, the trademark, and also the barcode. They have guided me through the journey of manufacturing and getting my products to the market. I'd like to welcome my fellow youths to come to Kirby and start their manufacturing enterprise journey. Thank you.
My name is Doris Obondo. I am the founder of Alaflora Products Limited. I'm in the manufacturing of cleaning detergents, cosmetic, and beauty products. Growing up, life was not very easy for me. I come up from a family of 9 siblings, and my parents were struggling to put food on the table. So basic necessities like soap were very difficult to get. We survived on basically one meal a day. So I know there are millions of Kenya who can resonate with my story. This is what motivated me to start Alaflora Products. I was in African Nazarene University taking an entrepreneurship course, and my lecturer challenged me to come up with a business idea. I thought of making a hand wash, and I went to my kitchen and started making a hand wash, but it did not come out well. Viscosity was a challenge, quality control issues like pH, active content were not consistent. It was at this point that the lecturer referred me to Kirby. Coming to Kirby helped me to create quality products. I was trained on good manufacturing practices, labeling, costing, and sourcing of raw materials. After my training, I realized that there are so many products that I can be able to learn, and I was trained on how to make bar soap, beauty soap, body lotion, hair conditioner, hair shampoo, shower gel, toilet cleaner, and petroleum jelly. As we speak, I have managed to come up with 6 products, 3 of which have been certified by KEBS, and the remaining 3 samples have been taken by KEBS and are awaiting certification. With the training from Kirby and the skills that I have acquired and the KEBS certification, I'm looking forward to doing mass production at Kirby and also be able to export to other countries. To all the women around the world, don't be afraid, just begin.
My name is Paul Ogalo from Kenya Enterprises Limited, based in Migori County. At Kamida, we do sunflower farming, oil production, and value addition of other products. The primary focus training that we've had with Kirby program was about how to do value addition, not only of the oil from the sunflower seed, but also the byproducts, like the seed cake, like the crude oil that comes out of it, making jelly, body jelly, making lotion, and soap. So those were the focus of the program. Since the training happened, our business has grown, I think, more than double. We are making quality soap, we are making quality lotion, and we are making quality jelly, body jelly. And besides now the focus of the company, which is the oil. So I would say that the sales improved, especially last year. After the training, we doubled our sales, from close to 4 million the previous year to 2024, 9 million. That was a very good achievement. So I think one of the energy was coming from this partnership that we got from Kirby partnership. But at least we have got the core of our products, the virgin oil certified, and we believe that is very quality product right now. And we believe that it is Kirdi that has really helped us, not only through this training. Kirdi came, they did in-house training for us, and they visited our plant all the time to check if we are complying with different parameters. And after that, we were able to get our certification very easily. One of the biggest challenges we have found or we experience is the challenge of cash flow. Because what we are doing involves a lot of money, and we started with just bare minimal resources. It requires a lot of money because first you must, all our products come from the sunflower. If sunflower is not there even in the village, then we can't produce anything. So it means we have to go back to the farming, organize farmers, mobilize them, train them, grow sunflower for us, and that itself costs money. You have not even started your own business. So the challenge is the cash flow to the extent that even when farmers bring in the seed, you can't produce other products because you want to put all the money in purchasing the seed. So that cash flow has been the challenge. The other challenge is the machineries. We have the formula, but we still have very poor machines for developing these products into standard form. And we would like to overcome these challenges by getting proper machineries. We can overcome these challenges by engaging more people to get into this business, because it's a business that requires the whole community. You need the growers, those who bring you the raw material that come from the community. Without the community, then you cannot do it. So we need to push the agenda of sunflower oil seed to be grown regionally so that it is in mass, and then these products can be produced.
Hi, I am Victoria Mshindi Kagechu from Duma Digital Limited. We are a small enterprise that deals with skincare products. So some of the products we have are lotions, body creams, body butters, and lip balms. The reason why I personally got into this particular venture was the need for the creation of safe products. Inspired me to get into the skincare line was the need for the creation of products that are paraben free, that are mineral oil free, and that actually serve the public as well as children. Gentle products that can be used for everyone. I came to Kirby for a site visit to get more information on how the institution works and on how somebody can benefit as a small enterprise from them. And in that process, I got to learn about the KDTA project that I was able to apply for, and fortunately, I became a beneficiary. During the training, we were taken through topics such as good manufacturing practices, packaging, branding, costing and pricing, as well as formulation classes. As an enterprise, I engaged with more innovations and developed 4 products, 3 of which have gone through KEB certification and are ready for market. I have added 1 more product that has been sampled and is awaiting certification by KEBS. For every young entrepreneur or any women-led enterprises, and even everyone at large, I would love to leave them with this one verse from the Bible. Isaiah 60 verse 1, "Arise and shine, for your light has come, and the glory of the Lord has risen upon you."
My name is Maria Lowe, Chief Operations and Marketing Officer at the Ubuni Green. Ubuni Green is a social enterprise that is in the process of developing biodegradable diapers. The idea piloted from Kajiado, where I worked for 3 years. One of the greatest issues that I faced was with teen moms. They couldn't afford diapers. And also the aspect of plastic in the diapers. Trust me, it looks very bad, just the sight of it. So that is what drew me to this conversation about having biodegradable diapers. The training was very impactful and also mind-blowing. We were able to learn the process of fiber extraction from banana pseudostems. And through that, you're able to get a pulp, which in return makes the diaper absorbent. That's very intense. That was a very intense process, and I truly learned a lot. We are certain that we will come up with a viable product, which in return will help less privileged people in the society. Heartfelt gratitude to the Ministry of Investments, Trade and Industry, the World Bank for funding the project, KIRDI and KIEP for the opportunity and turning our vision into a reality.
My name is Lucy Mzugula, and I run a small enterprise called Lolly Creations, where I'm the founder and the creative director. I have had this organization for slightly over 10 years, and we deal with fashion accessories. I applied for the KIRDI KIEP program. I wanted to do leather goods because I majorly started with denim bags, but I also went to PU leather, and also I'm looking at venturing into genuine leather bags, and that is why I am here, that we got to learn how to do different leather goods.
come on 17, kindly. So, thank you, Director General Nema, representative. The floor is yours. So we have Dr. Jasper Omwenga. He's the one who is representing the Director General and is taking us through a presentation before we have the panel discussion. Thank you.
Good afternoon, everyone. My name is Dr. Jasper Omwenga. I work with the National Environment Management Authority as the Principal Environmental Planning Officer. I also double up as an officer in the DNA office. There is what we call a DNA office. Later I'll talk about it. It is the designated national authority for market mechanisms under the Paris Agreement. In short, we just talk of the carbon markets. So briefly, that is our functions as given by the Environmental Management and Coordination Act. That is the act that creates NEMA, that is the National Environment Management Authority. And as I was being introduced, the Minister of Environment was mentioned. NEMA is a body in the Ministry of Environment, Climate Change and Forestry. It is a saga in that particular ministry. So our mandate, core mandate, can be summarized as that: coordination of all matters related to the environment. And so our mission is to ensure clean and healthy environment for all. That even as I was here during that panel presentation, and the issue of environmental sustainability came up. That is part of the work that we do, that we ensure that whatever you start in the manufacturing sector, in the industry sector, that it is safe to the environment and also to the communities. So we also have functions that have been assigned to us by the Climate Change Act. As you know, we have the Climate Change Act, CAP 387A. That act gives us some additional functions that we are supposed to monitor, investigate, and report whether public and private entities are in compliance with their assigned climate change duties. That at one point there is, the Climate Change Act has established the apex body called the National Climate Change Council, that at one point, once it is fully operational, it will be assigning entities, private and even public, some duties. And so we'll monitor, investigate, and report as to whether those entities are in compliance. Also, we will, once it is operational again, we will regulate, enforce, and monitor compliance on levels of greenhouse gas emissions as will be set by the Council under the Climate Change Act. That these entities, we envisage that at one point they'll be given directions on the emission levels of these greenhouse gases. And so we'll ensure that every entity complies with the levels assigned. These are measures that are already in some countries, in most developed countries, and Kenya being a signatory to these international climate agreements, that is where we are headed. Then we ensure that there is the integration of climate change risk and vulnerability assessments in all forms of assessments that take place within our purview. when you start a project, when you start a manufacturing plant, right from the beginning, you actually apply to NEMA to be given a license. Now you apply by subjecting that entity to environmental and social impact assessments. Now, one of the things that we'll be looking at is to ensure that the climate change risk and vulnerability is also mainstream. It is also addressed in those applications. The Act, the Climate Change Act again, has given us the role of being a DNA, a designated national authority for the market mechanisms under the Paris Agreement, which in short I said it is the focal point for carbon markets in Kenya. And how is this one relevant to your sector? We've seen investors from the manufacturing sector coming for these to be registered to undertake carbon projects. They generate carbon credits, which they can seek authority for transferring to any other interested stakeholder. So we have also been given another function of hosting the national carbon registry, that every carbon project in the country now will be applying to NEMA, then we'll be keeping registers of all those projects, and even the number of carbon credits generated, the type of carbon credits generated, and any other transaction that will take place involving carbon credits. So we'll host a national carbon registry. Now we also have some other regulations which will give us more other functions. They are at a very advanced stage of being developed. The first one being the carbon trading regulations, the one I've abbreviated there as CTR. Then carbon registry regulations, and then we have the non-market approaches regulations. So I was told to speak something about green manufacturing and climate resilient industrialization. Yeah. So that before I talk about it, I want to draw your attention to the greenhouse gas inventory that was done and submitted last year, and the Ministry also of Industrialization participated in this. It shows that there are some greenhouse gases that emanate from that sector. Or before even there, we have greenhouse gases emanating from various sectors in the country, and that these levels are on the increase. You can see those years and up to what is projected. So the levels are increasing. That is in Kenya from various sectors. First sector being energy, the other one being industrial processes and product use. We have agriculture, we have forest and other land use, we have waste. Those combined, they give us some levels of greenhouse gases which cause climate change, and as indicated there, the levels are on the increase. So in what I've called the EPO, or what is called EPO sector, industrial processes and product use, we have those greenhouse gases that emanate from there. We have carbon dioxide, we have methane, we have nitrous oxide, we have those fluorinated hydrocarbons, and they emanate from various activities that fall within that manufacturing sector. So we have significant emissions from fuel use in these industries, then emissions from industrial waste. Now, in the industrial processes and product use sector alone, you can see those emissions, the way they are behaving. They are increasing over time because of our manufacturing activities, our industrial activities that are taking place within the industrial sector. So the emissions are increasing. And so when we are talking about green manufacturing in Kenya, which we also call green production, as a country, we are committed to creation of products in a way that reduces the overall carbon footprint. Now, all those gases, when we, which I have mentioned there, the methane, the carbon dioxide, the fluorinated hydrocarbons, all these, in short, we just talk of, there's a way they are expressed in terms of carbon equivalent. And so here we just talk of their carbon footprint. So we want to produce products in a way that has very low footprints. And so we target at minimizing negative environmental impacts while conserving energy and the natural resources, minimizing negative environmental impacts. In the report which is submitted, which I believe every entity that you run must be having a license, must have applied for a license from NEMA. It has the positive impacts, then we also have the negative impacts. Positive impacts like employment, we say that those ones we should maximize them. But for the negative environmental impacts, we ensure that we minimize them, or we look for ways that we can mitigate their impact. So while conserving energy and the natural resources. Now, even those gases which I showed you, those graphs, we talk of emissions compared to the pre-industrial period. Pre-industrial period, meaning that the emissions were very low. Kenya, we are looking forward to industrialize even beyond where we are. And so can we develop, can we manufacture, can we industrialize with minimal negative environmental impacts while conserving energy and also not affecting our natural resources much. And so practices which we look at include technology to minimize operational efficiency, using renewable energy sources, sourcing sustainable materials, and protecting our natural areas and ecosystems. It is very important. People say, they come to us, they say, NEMA with these now new regulations, stringent regulations, investors are running away from Kenya, they're shying from investing in Kenya. But when you look at the effects of this industrialization, you know, we need to coexist. We need to coexist, not looking at one area as we affect the society, as we affect the community, as we affect our own environmental resources, our water, air, and others. So that is in this green manufacturing space. Now, as one of the measures, the country has input or has committed itself in doing a few things so that it can meet its international obligations. And these ones are they are contained in what we call the nationally determined contributions. So Kenya has made some commitments because Kenya is a signatory to the United Nations Framework Convention on Climate Change. It's a signatory to the Kyoto Protocol and even to the Paris Agreement. And all this, their aim is to ensure that these greenhouse gas levels do not reach very dangerous levels that will threaten our very existence. So we have made commitments, and which is very which is contained in this latest agreement of the Paris Agreement 2015, that if we reduce the emission of these gases, then okay, we intend to achieve a temperature increase, to limit the temperature increase between 1.5 to 2.0 degrees Celsius. And to do this, we have made some commitments in what we call the NDC, our NDC, first NDC, which I've called their NDC 2.0, which runs from 2020, it goes up to 2030. And then we also have the NDC 3.0, which runs from 2030 to 2035. And this NDC says that we can carry out various activities in the energy sector, in the EXPO sector, that is industrial process and product use. We can also carry out activities in the agriculture, forest and other land use, and also waste, so that we limit the greenhouse gases which emanate from those sectors. As you can see, the manufacturing sector is covered there under the industrial processes and product use, because it is a significant source of these greenhouse gases. So in the first NDC, there was a commitment that we reduce our emissions by 32% compared to the business as usual, where we were producing 143 metric tons of CO2 equivalent. The new commitment, which we also submitted to the UNFCCC last year, commits the country to reducing these emissions to a further 35%. So we have to do a lot in those sectors, in the sectors that we have talked about, the energy, the EXPO, agriculture, forest, and other land use, and also waste. So it contains things that can be done in that particular sector. We are talking of increasing of renewables in the electricity generation mix of the national grid, enhancing, because we are talking about renewables in electricity. This sector manufacturing, that is where you find that a lot of fossil fuel and sustainable fuels, they are still being used. It falls under the hard to abate sector. So we are exploring as a country the increasing of renewables in the electricity generation mix of the national grid. Enhancement of energy and resource efficiency across the different sectors. This is where we even talk of the circular economy. We are talking also of clean, efficient, and sustainable energy technologies to reduce over-reliance on fossil fuel and on non-sustainable biomass fuels. We're also talking about low carbon and efficient transportation systems. You had one of the presenters talking about the fleets of vehicles. Whereas that one is good, we also look at it from the emissions point of view. Most of them, they are using fossil-based fuels, and those are the major sources of CO2. We're also seeing significant improvements in this particular area. People are going e-mobility, and that is quite commendable. Another NDC commitment is to ensure sustainable waste management systems. Waste is also a major source of greenhouse gases. We have CO2, that is carbon dioxide, from plastics. When we burn them, when we burn textiles, they are giving us fossil carbon, which is a very destructive greenhouse gas. So we talk of sustainable waste management systems. I've talked about CO2. We also have significant sources of methane from this particular sector, especially the food processing industries. There is a lot of methane that emanates from there, which is a greenhouse gas. So another NDC commitment is on the enablers, continuous improvement in terms of technology development and transfer, capacity development, and then looking for this climate finance to address mitigation and adaptation actions. Now, this sector is very important, but then it is also vulnerable to the effects of climate change. The government takes cognizance of the fact that we have long life fixed assets with the long supply chains, with the significant water and energy requirements. Now, these requirements are in most cases affected by climate change, including floods, droughts, and extreme weather events. So climate change will increase resource scarcity, such as water and raw materials that are inputs to the manufacturing process. So we are saying the sector is, though it is also an emitter of these greenhouse gases, it is equally vulnerable. It is affected by the effects of climate change. So it's another commitment the country has done to itself of ensuring that there is reduced vulnerability to the effects of this climate change. And so those are some of the specific measures that the country has committed itself, and they are found in the National Climate Change Act, National Climate Change Action Plan, the latest being NCAP 3. We have done the NCAP 1, NCAP 2, and so we have now the National Climate Change 3. And here it has measures to create or to enhance resilience in the industrialization sector. And that one is found under strategic objective number 6, which is to promote energy and resource efficiency in the manufacturing sector. The challenges that we note there is that when it comes to mitigation, manufacturing or industry sector, it has many. It is actually a hard-to-abate sector with limited options. Talk of industries like the cement manufacturing industries, the steel manufacturing industries. So it has limited options for reducing these greenhouse gases. Then it requires intensive investment in green technologies. I was happy to hear that KDC is trying to provide funds to address this particular challenge. Then the issue of ensuring that you produce products which compete well all over. That's another challenge that we see, that even as you now look for ways of reducing or when investing in these green technologies, then it pushes the cost higher. So those are some of the challenges that we are cognizant of. Now the opportunities is that the investment in renewable energy options, we've seen good investments in wind energy, solar energy, and other options which are renewable. Then circular economy also gives another opportunity, where we talk of industrial symbiosis and other initiatives that we see it as another opportunity. Then I've talked about carbon markets, market mechanisms under the Paris Agreement. You can explore the carbon market such that it can give you additional profits to which can be plowed back into expanding businesses. Yeah, those are some of the opportunities that we see, and those are some of the challenges that we are able to identify. Thank you so much for listening.
Thank you very much, Dr. Omwenga. Let's give him a better clap. So keep your questions kindly. Please note them. We are going to have a panel discussion, and then after the panel discussion, now we'll invite the questions kindly. So I'm going to invite my panel speakers. We can be there. Kenjen, then we have Kepro, Mr. Green. Good afternoon once again. As I told you, my name is Hannah Kiari. I'm a Director of Industries in the Research and Policy. So I'm going to give my team just a time to just introduce themselves. I hope there's a mic near you. Yeah? There's a mic? You can start from that end. I think you can introduce yourself again.
Once again, Dr. Jasper Omwenga from the National Environment Management Authority. Thank you.
Thank you very much, Anna. My name is James Odongo. I work for the Kenya Extended Producer Responsibility Organization as a CEO.
Thank you, Hannah, for inviting us here. And good afternoon, delegates. My name is Engineer Peter Njenga, the Managing Director and CEO, Kenjen.
Good afternoon, everybody. Thank you for having me. I'm Kieran Smith, and I'm co-founder and executive director from Mr. Green Africa.
Thank you very much. So we go straight to the questions. I hope I am not going to burn you. You've had a look at them. Okay. So let me start with Mr. Odongo. Tell me, waste management is central to the circular economy. How is KEPRO advancing producer responsibility and sustainability within Kenya's manufacturing sector?
Okay, thank you very much, Anna. As you rightly put it, I think we are getting to that realization that, yeah, waste is actually a significant contributor to, when you're talking about the triple threat to, or rather we're talking about the planetary crisis. And so when you're talking about Kenya, for instance, you're looking at more than 22,000 metric tons of waste being generated according to the National Environment Management Authority. And a quick back of the hand calculation would be looking at more than 9,000 tons of CO2 emissions if this same is to be mismanaged. Now, with that recognition, then the Kenya Extended Producer Responsibility, we started operations back in 2021. And just a bit of history, hopefully Dr. Omwenga will have the benefit of delving more into the history. But KEPRO started back in 2021, of course, as a culmination of various activities that had been spurred within the industry. But the most relatable one to a majority of us in the room is the ban of the single-use plastic carrier bags back in 2017. And of course, increasingly, NEMA was finding it easier to ban than have negotiations with government or with private sector to manage the environmental consequences of their products. And so extended producer responsibility, just from the name of KEPRO, came up as an ingenious idea by the private sector to to ensure that they were then operating within a predictable policy landscape. So extended producer responsibility is a policy approach then that requires manufacturers, producers, and brand owners in Kenya to ensure that they are taking care of the environmental consequence of the products that they are introducing into the Kenyan market. And of course, this starts right at the design stage of the product through to the end of life management. With respect to KEPRO, we currently support around 1,100 manufacturers and brand owners in Kenya to comply with this regulatory provision. So just to point out that it is both an environmental obligation, but of course in Kenya it's also a regulatory requirement as enshrined within the Sustainable Waste Management Act and the attendant regulations. The EPR regulations are currently in court, but they sort of provide a high-level overview of what EPR is supposed to look like once implemented on a mandatory basis. As to the success stories, if I may borrow from the previous panel, with respect to how we are helping manufacturers then contribute to the positivities of climate change mitigation. To date, we've been able to support directly and indirectly of our manufacturers to remove or divert waste from landfills to the tune of around 80,000 metric tons. And through the contribution of our members, we've been able to support the recycling ecosystem, and here you'll be talking about the Mr. Greens and the likes, to increase their capacities. So through that approach and subsidy program, we've been able to pump in over 300 million Kenyan shillings since we started operations to date. So that is just a high-level overview of what we've been able to achieve.
Thank you very much.
Thank you.
Okay, then I go to Dr. Mwenga. Climate smart investment is key to sustainable growth. So how is NEMA promoting cleaner production technologies and circular economy principles?
As I said, as the authority, which is NEMA, we call ourselves the authority whenever I talk about it. What I mean is just NEMA in that space of environment, and how are we promoting cleaner production. First of all, we want people to understand that it is an individual's responsibility. At the corporate level, they also understand that they have a responsibility. So we are doing a lot of awareness, first of all, to our various stakeholders. We have a whole department of environmental education just trying to make this subject matter sink into themselves. They know that we cannot just take only one side of production if we do responsible production, such that any negative impact that comes, like waste management, issues of pollution, we are able to tackle them at that very early stage. Then we also have some regulatory measures. Just like another country, we must have those laws, regulations to govern that particular space, and there are quite a number, but under the Environmental Management and the Coordination Act, we have the Sustainable Waste Management Act, and so it spells out on the roles of individuals, roles of organizations, roles of entities when it comes to taking proper stewardship of the environment. Besides this, the authority is working with sort of kind of mentorship on a few entities, in that when somebody has an idea on what they really want to do, how to approach a given environmental issue that will lead to cleaner production, we have that kind of support through the Department of Compliance and Enforcement. It is called assisted compliance, such that you want to do something, so they comes in and then they can walk you through. So those are some of the measures that we have at the moment. Thank you.
Thank you very much. Then we go to our CEO, KenGen. As Kenya's largest renewable energy producer, how is KenGen supporting industries to access affordable, clean and reliable energy, and what role can energy partnership play in achieving net zero targets?
Thank you, Hannah, for that question. And indeed, it is true that KenGen is the largest electricity generator in this country. We are a state corporation. We are listed at Nairobi Securities Exchange. We are 70% owned by the government and 30% owned by the private investors. We pride ourselves that approximately 90% of the power we generate is actually renewable. And our portfolio runs from hydro, which is about 840 megawatts, 826 megawatts. We have geothermal, which is 754 megawatts. We have a small composition of wind at 25.5 megawatts, and the balance is from thermal, from fossil fuels, about 180 megawatts. So in total, our installed capacity is 1,786 megawatts. We actually are very proud that we ranked as number 7 in the world as the largest geothermal generating country, courtesy of KenGen and of course a few independent power producers. In Africa, we are actually number 1 in geothermal generation. And yes, that is very important to note. And how do we support the industries? You know, our energy, I've said, is renewable, it is clean, and more importantly is that we supply our grid with what we call the base load power from geothermal. That is, you know, continuously available all the time. So that gives stability to the grid. And that is very important for the industries and anybody who uses electricity for any form of business, you know, propagation. So the other way that we are actually going into currently is that we have established what we are calling KenGen Green Energy Park in Naivasha among our geothermal power plants. And we have secured special economic zone license to operate that particular zone as an SEZ. Of course, that tells you that any person who is going to invest in that space will enjoy tax incentives offered by special economic zones. It's already up and running because we already have 3 investors who have already broken ground. We have an investor who is going to put up a data center. We have another investor who is putting up an electric vehicle manufacturing organization, and I think that they broke the ground in the month of September, and they are saying within another 2 years, perhaps by 2027, we should be having the first electric vehicle manufactured in Kenya. And you know what that means. It is going to create jobs for Kenyans. It's going also, of course, to ensure that we keep our environment clean, because we are going to supply our power, which is 100% green, and of course these are electric vehicles, which are going to ensure that we maintain the carbon neutrality in our environment. Recently, I'm sure you have been following the news, and this week on Monday, His Excellency the President broke the ground, officiated the breaking of the ground for a company that is going to produce fertilizer, green fertilizer. And we are partnering with them in the sense that we are going to sell to them the steam. They will produce electricity entirely specifically used for producing fertilizer. And that company has assured our government that in the next 24 months, we should be able to have the first ton of green fertilizer from Naivasha. So you can see how we are supporting our industries. And we have said that green energy park, you know, even light industries like warehouses, pharmaceuticals, we are inviting anybody who wants to come and enjoy those tax incentives, and also the fact that we are going to supply power directly from our generators to them, and it is going to be 100%. And that is going to be very reliable, of course, because it has not gone through the long transmission lines, which are subject to vagaries of nature. So we want to ask everybody who has an interest in investing in Kenya, and more specifically to get 100% renewable energy, to come to our green energy park, where we shall be able to provide. There is adequate land, there is adequate water. You know, we are very close to Lake Naivasha. If you have been following the stories, Lake Naivasha level of waters are rising. So there is a lot of adequate water from Lake Naivasha, so there will be no any challenge. Thank you.
Thank you very much. And you go to Mr. Smith. Mr. Green Africa exemplifies waste to wealth innovation. How is the company turning waste into economic value while demonstrating circular economy principles?
Yeah, thank you. Well, the main thing is we enable manufacturers to use an alternative.
And maybe you can tell us a little about your company.
Of course, I'll get to that. So before I take those steps back, is to get to the point really quickly, is we enable manufacturers to use recycled plastics in their packaging locally. So locally sourced, locally collected, locally recycled, and then locally back into packaging. Right? So that's what we do and how we create wealth or value. Now, if we take a couple of step backs of introducing what do we do as Mr. Green Africa, we started our journey 11 years ago, and that was at a time when, you know, circular economy as a term probably was not even existing, or if it existed, not many people talked about it as we do today. The whole notion of the importance of plastic recycling to avoid more plastic pollution was also not as a big topic as it is today. And then if we talk about a huge informal market, informal sector of waste collectors, waste pickers, or waste entrepreneurs, we would like to call them, we're not on the front lines of the discussions of making a fair transition when we talk about circular economy. So when we started this, we started it with two principles. We started with, we want to be able to buy, collect, and inclusively and empower waste collectors, informal waste collectors, waste pickers, to earn a fair living of the job that they have already been doing. Yeah? So that was principle number one. So we copied actually the principle from fair trade that you see in agricultural value chains, and we applied it into our value chain. And just the main difference is our smallholder farmers are waste entrepreneurs who harvest every day in urban settings. Yeah? And they harvest, instead of crops, they harvest waste. And so that was number one principle. And then number two was focused on local value addition. We talked about green manufacturing locally. Many times with commodities, let's take tea, let's take coffee, the value addition, the real value happens outside of the country. And more we're seeing these trend lines coming back to, can we do the blends here in Kenya? Can we produce all the different coffee blends, the tea blends, etc. within Kenya, for Kenya and then for export, right? And the same principle we applied from a recycling perspective. We said instead of just aggregating and then doing value addition outside of country of origin, we create local value addition. And now this brings us to this integrated model where we aggregate buyback plastics in a full, transparent, traceable way. We value add and convert it into high quality recyclate. So by the way, this quality, when we talk about quality, is European standard quality to go back into local packaging, right? And we just actually last week we were able to have a small factory preview of having implemented now the first Kenya's first recycling factory that is at the scale and the size as you would see it in Europe. Yeah. And including food grade capabilities, so one can go back into food packaging. Yeah, so that's how we do it.
Thank you very much. I have some cross-cutting questions I just want to ask all of you. So, and let me just mention them so that you can think about them. What scalable models can reduce waste and create green jobs in Kenya? And then what incentives can encourage private investment in sustainable waste management and recycling? I just give maybe just 2 minutes each. Maybe you can just.
Okay, thank you, Anna. So I'll give it a shot with respect to the two questions. On the scalable models, at KEPRO we run an accelerator program, and increasingly we've learned that all businesses are actually scalable, as long as the business founders are able to first package it in a way that you're able to demonstrate a return on investment and answering the question of what is the business case for circularity. And ultimately then, as long as the business is anchored in localized solutions so that there is ownership at local level, then I think such a business would then best be described as scalable. Because really, if we are to say then that there is a definitive framework for scalability, we'd be having a lot of financing within the waste ecosystem. Unfortunately, that is not the case. And I believe this would not necessarily also be sector agnostic, but we've also seen a lot of financing predominantly focusing more on the formal businesses as opposed to the informal. But given a chance, then we've seen the informal businesses coming and upsetting what would be the business as usual in an ordinary scenario. Now, on to your second question, as far as the policy and fiscal incentives that would then help, and these I'll be speaking for the waste actors. I think first, broadly speaking, then we need to start looking at the fiscal and policy incentives that businesses within the ecosystem can be able to leverage. For instance, Kiran has talked about the recycled pellets. I'm sure maybe he might not go into the numbers, but majority of his processed recycled pellets is exported as opposed to being used locally. Why? We don't have a policy that then requires manufacturers to incorporate minimum recycled PET, for instance, within their production processes. So that would then mean that there's no sustained market locally for Mr. Green to be able to sell their end products. The other thing I think would be discussions on concessional loans and unique financing tailor-made for the recycling ecosystem. We were having a discussion with KDC earlier before we started this session, and we've noticed that unfortunately majority of the formal financing institutions are still hesitant to invest in the waste ecosystem, arguing that it is fairly risky compared to other traditional business models. But I think that is debatable. Mr. Green has been there for the last 11 years. I don't think he'd be still operating if it is not a profitable business. So I think it's just those open discussions on unique financing models, but then these businesses within those sectors trying to transition Kenya into a circular economy can then be able to leverage and unlock those benefits that are embedded within those unique financing tools. Yeah, thank you.
Thank you. Just to add to what he has said, I think for us in Kenyan, we are forthright in offering the opportunity for these waste industries to set up in our green energy park, where we have talked about very reasonable cost of electricity. In fact, our base cost is at 7 US cents per unit. So that will help them to be able to work out on how they can grow their industry. So for us, we support those industries. Any industry that would want to come and set up there, we can actually come to an agreement. Thank you.
Well, from a regulatory point of view, on issues of incentives, we might have a little, but then in the Sustainable Waste Management Act, it is strong on the establishment of material recovery sites, material recovery facilities, which will encourage the segregation of waste. Those which are useful will find their way back to the manufacturing process. And so ours really is to see that this strategy comes into practice, and that we see the circular economy running. The other thing, I've worked also as a field officer from 2004 all the way to 2019. And I've worked in environments that had challenging waste management issues. And what I saw is that youths want to venture into space. Giving them the support they require, including what you've mentioned, the issue of incentives, is really key. What will make them get these materials from wherever they are, from households, then they go to the material recovery facilities, and then finally into the production value chain. So that is one thing that as the authority we are trying to address at the moment, that once they become operational, they can now be opportunities for youths. Yeah, thank you.
Yeah, I mean, just to echo what has already been mentioned, to the first question, I think one of the key things where I see scale and impact can happen is all of us being included as consumers, right? So right now, if we look at collection systems that are there in terms of availability, we don't have yet a fully scaled model where any consumer anywhere in Kenya can actually partake in recycling. Yeah, meaning bringing back plastic bottles into a specific system and knowing that it gets recycled and finds its way to recycling. I think there's a huge opportunity for us to accelerate waste collection and recycling by including the consumers, yeah, and making it easy and dignified for consumers. Yeah. On the second question is, yes, I also see there's two parts. There's the fiscal piece, and then there's the policy piece. And I think, again, we already have EPR regulations, which is a very key step. I think Kenya is one of the pioneers implementing that on the continent, right? So we have to acknowledge that. So we're already on the forefront there. The main element there is really enforcement of the EPR policy, right? It's in court right now and makes it unclear for all the stakeholders on how it's going to go. But once we overcome this hurdle, it will enable and facilitate better systems and more investment and kind of like confidence that my return on investment comes back. And maybe, James, just to for the record, we're not yet profitable. What we have been doing is we have been taking a very long-term view and investing in the country, investing into the system, because we always like to say we're not building a company, we're building an industry. We're on the forefront of building an industry here in Kenya, a solid recycling industry, and we've proven many data points that it's possible, but we haven't come over the hump yet in terms of profitability. And one of the key things is, as you said, policy, right? Policy of like, how could we create a much more stronger demand locally? Yes, there is demand internationally, but for example, me trying to sell into Europe, there's a big prohibition in being competitive in the current market environments because of transport costs, freight costs, right? So the overall recycling business model is yet to be proven, and there are many data points that suggest that it is sustainable, etc. So, but they haven't been there, and policy can reinforce that. Policy can actually accelerate investments into more plants, into more capacity, into more recycling capacity and quality for local demand and market. That's how I see it. Thank you.
Thank you very much. And maybe also something, even I can just emphasize, even for a group like this, it's good from the domestic point of view. We start separating waste so that you don't lump everything together, even as you give the waste to the people who collect, maybe from your households. You can maybe have different bins, and maybe have the organic ones, the plastic, and maybe the glass and the recyclable ones. That makes it easier, even for the people who are taking from the other stage. It makes it easier. So for the next round of questions, how can manufacturers embed circular economy principles into production systems? And then what role should finance institutions and development partners play in de-risking green investment for manufacturers? You can start with.
Okay, let me go again. Well, so I think from a manufacturing perspective, I think the main thing is, which is already naturally happening, reducing waste within your production process, right? And bringing whatever waste there is back into the cycle of the production. Yeah, that's number one. And number two, that's now obviously for my own cause and for recycling, but that applies to many other raw material streams, using recycled content in packaging and manufacturing for whatever product that we're producing, which creates a localized circular economy, yeah, for any material that is, right? So that's from a manufacturing standpoint, for any manufacturing acting here in Kenya can take those two lenses of circular economy. And of course, any packaging producer, whatever packaging you produce, think about how can you make it recyclable, most recyclable in the design of the packaging, right? Because then the street value on the ground for it to be picked goes up. The more recyclable, the higher the value in the street. The less recyclable, the lower value, and it ends up lying around in the street. So those are the principles. Own production, inclusive of creating a demand for recycled packaging, and the design for recyclability. And then from a financing perspective, to de-risk. I think, again, what we've seen now over the 11 years, being a pioneer, it took us so much work and effort to convince that people invest into our business. And the terms that people invest into the business are very aggressive. Yeah, so we've never went down the route to try to get grant money, because grant money is a distraction. It serves the grant, the donor, rather than it serves the organization. And so we went down the venture capital route, which means aggressive terms, which means aggressive loans and equity terms, and diluting the business heavily, right? And then there's no patience. So on one side, venture capital, and no patience. So one of the key messages there for me is more affordable debt, less dilutive, less punitive, and much more longer term thinking. And I think that would already greatly facilitate more investments into circular economy principles. Thank you.
Thank you. Just to add a small voice, I think what Anna, you talked about as residents to ensure that we segregate our waste is very key. And for those of you who have traveled to other countries, you notice that there are very clear rules that you cannot mix your waste material. So it's important that we enforce that and ensure that it happens in our country. In the area of financing, I think from a Kenyan perspective, we have had quite a lot of experience dealing with financiers, and you know, a lot of negotiations goes into it so that you ensure that you get the most reasonable interest rate for your financing, and that helps you to ensure that whatever you're doing, the costs is you know, reasonable in the market. And I'm happy to know that he's still pushing his project so that it comes to profitability. And I want to encourage you to continue moving on. It will break even at some point. So for us, sometimes we do what we call mixed financing. You can go to the DFIs, you can go to the local banks, and you can also think about joint ventures where you can look for other people who are interested in joining up with you to be able to carry out what you are carrying out, because if you have a very good business case, then you are able to convince people to come in and put equity or debt, and you work together. Thank you.
Yeah, so thank you. Maybe just to add on to what Kiran had mentioned around how manufacturers can then embed circularity into their business process. I think adapting to the changing dynamics, we usually say that you adopting circular economy principles within your business model is essentially you future-proofing your business model, because we're increasingly seeing a lot of legislative disruptions to try and minimize the environmental consequences of some of these products to the environment. Locally, we have the extended producer responsibility and the MCA Act through the plastics management regulations. Regionally, we've seen the East African Single-Use Plastics Bill, currently under review by the East African Assembly. When you're talking about even export markets, the EU is now having fairly progressive laws, the PPWR and the likes. So this then calls for that urgent action by manufacturers to see it as not necessarily a hit on their P&L, but more of you taking a strategic decision to be able to future-proof your business model. And in addition to cost savings, or rather providing opportunities for cost savings, listening to engineer here, and I know even outside the country, we've had a lot of discussions on waste to energy conversations. I think if a manufacturer was to consider approaching engineer and telling him, let's work on a project, highly likely he might want to consider that to take advantage of the evolving carbon market platform. On the other issue around de-risking, I think there's talks around green financing, green bonds and the likes, but we are not seeing our financial institutions locally bringing down or breaking down this information to the local manufacturers and producers, or really industry actors, to be able to relate with this product offering. So in addition to providing those credit guarantees or green bonds, I think they need to then demystify the content they are in for the average business person or industry player to be able to relate with the information that they're sharing. And of course, additionally, maybe have a bit of flexibility around their due diligence process. We've seen even when you're talking about the green financing or the green bonds, that due diligence process is not only so lengthy, but also quite expensive, hence acting more as a deterrent than an encouraging factor for the adoption of some of these financing tools. Yeah.
Well, maybe addressing the second bit on financing, the use of carbon markets to generate climate finance to which you can use in that particular sector. When I was doing the presentation, I talked about fossil carbon. You know, the business as usual, what we've been seeing is the burning of this to give us greenhouse gases. Any other technology that can reduce the emissions from this fossil carbon can be turned into an opportunity which can fetch finances to power this particular area. So NEMA, as the DNA, we offer guidance on this. If you want to start that carbon project under the carbon market regulations, we have a very simple form which is under Schedule 1. You open it, it will just ask you for the title of the project. It will ask you for who are the owners, who are the players of this, who is the project proponent, who is the project proprietor, and then project details. Now in summary, you know, what do you want to do? After that, it comes to us, we look at it. If it has the potential of generating carbon credits, then you're given a go-ahead to generate your credits, which you can, is an incentive in waste management. And so part of the proceeds can be used now to actually manage waste well in that particular sector. Yeah.
Thank you very much. Now, in one sentence, maybe just want each one of you maybe to give me something. In one sentence, what is the single most impactful action Kenya should take to accelerate its transition towards green, climate resilient, and circular manufacturing?
I think from Kenyan perspective, I should have mentioned that we need to take a very bold step to ensure that any future generation is purely renewable. And for us in Kenyan, we have a very ambitious strategy. For the next 10 years, we want to add 1,500 megawatts on top of what we have, as I had mentioned earlier, so that maybe by the year 2030, we have 100% renewable energy. And that will go a long way in ensuring that we take care of our climate. Thank you.
From my side is the issue of waste management at source. It will change everything in the waste management space. Actually, we'll stop talking of waste. Actual players and the researchers in that particular area have told us we do not have waste. If we do the proper segregation, everybody plays his or her part, you'll find that we will not have waste. We'll have a resource which can be taken back to the manufacturing process. Thank you.
Yes, I think Prof has sort of aptly captured what I wanted to say. But just to re-emphasize, Anna, that interestingly, this is now a legal requirement. So at a national level, I think we're in the right trajectory. As Kiran had said, I think we now need to move towards walking the talk in terms of enforcement. So just FYI, and as me taking advantage of the platform to create awareness, the Sustainable Waste Management Act, I think Section 12 talks about you being required to separate your waste into 3 fractions. I know NEMA had published a national color-coded bin system. So you need to separate your waste into 3 fractions: recyclable, non-recyclable, as well as the organic waste. And you'd have solved, I think, 90% of Kenya's waste problem, because the idea is, first you put it in a bin, and then if you put it in the right bin, you're ultimately solving quite a significant challenge that we're having as an industry. Thank you.
Yeah, I completely agree what my fellow panelists have said. If I had to add one, again from a Mr. Green Africa perspective, I think the short term, the single most effective lever is through creating demand through policy, i.e. making, for example, recycled content mandatory. And this wouldn't have to be immediately 30% or 40% what the Europeans are doing. It could be 5%, could be 10%, and then over the years you add. And this creates the real message, the same message that has been sent by policy of banning the plastic bags, had a tremendous amount of impact on the industry, that they know they have to act and have to do something. And that could be a flip side of creating the policy, the mandatory targets, which would ultimately, immediately change the dynamics. Yes. Thank you.
Thank you very much. These were very rich discussions, and we appreciate the speakers. Now I'm going to turn to the audience so that we can have this one round of questions, and have my ushers. You can come and assist me so that I can move the mic. Where are my people? Jared, you can come and help me. Oh. There's somebody who has raised. Start with him at the front, then you have somebody else on this side. Yeah. Somebody else on this side.
Okay, thank you.
Please address your question to the specific speaker.
Okay.
Thank you.
Okay, thank you very much for the speakers for that fruitful discussion. My name is Joseph Nyongesa from Institute of Packaging Professionals, Kenya. So we bring our professional perspective to this, as we are at the heart of the specification of packaging, design, development, and what have you. So we look at what we call the handprint of packaging. And a lot of times we hear about footprint. Fair enough. But we also look at the handprint of packaging, because I'm coming to ask a question each of you. I'm just laying the stage. So we look at the handprint of packaging. So packaging plays an indispensable role in our life. You can see you have a pack in front of you. So I'm talking of the handprint. And even in your house, you touch packaging every day. And when we look at the supermarkets, we see how they are decorated and how they are beautified because of the handprint of function of packaging, which is functionality. We see our logistics supply working because we are moving things around the world from where they are made to where they are going. At the same time, when we look at the handprint, the footprint rather, we are aware of the gas emissions, climate change, which I have ably addressed. Now, so we look at the footprint and the handprint. And now going back to my specific questions, great, circular economy is there, great, the regulators are making great effort and you need regulation to move this. So my first question is to the regulators. Yes, you have come up with all these nice regulations, and as packaging professionals, we are taking notes, because when we develop packaging from time immemorial, we have responded to people's needs. Yes, you have said that we should, you have passed a law that we should segregate things at the source. Great, nice thing. But the ecosystem of making that a reality is still a challenge. So I wonder how you are going to move from regulation to creating an ecosystem. Like I woke up, today is Thursday, where they collect cabbage at my place. So we put things in bags, because we don't have all those bags. We put in some bags, they put in, somebody comes with a lorry or a mkokoteni or something to take them away. So, yes, what is the ecosystem to make sure these things are picked from the house? It is not only waste separation at source, but it should be waste separation in the ecosystem. So it should be waste separation all the way. As a packaging developer, of course, I can incorporate some recycle in this. And thank God Kenya has made a landmark progress by coming up with a standard for recycled PET, which hopefully can be taken back, so that when I sit down to figure out what should go here, I can put 5% or 10%. But I need clean recycled. So from the regulator's perspective, I'd like you to specify how you are going to ensure that it is not really segregation at source, but segregation in the whole system. That's the first question. The second question to my energy friend, we know that waste is a resource. And this is coming from fossil fuel. So, and we know that recircularity, even you can recirculate, you can do everything, but there's always an end of life. So do you have any plan to convert this packaging waste into energy? When, if we can make you a material recovery center, so that when we segregate all the packaging, whether it is plastics or paper, you can burn it and generate energy. So in your strategic plan, now that this thing is unfolding, do you have any of those possibilities? On recycled content, we are aware as developers that when we develop a packaging, we must make sure it is safe. That is functionality. It must be safe, protect the product from point of production to point of consumption. If you can assure me of clean, recyclable, which is safe, I can't, if you give me recycled, when I put in water, it will migrate from the plastic to contaminate the water or any other product. Then of course I will not do it. Because the first responsibility of packaging is to ensure that it is safe and it's able to protect the product from the point of production to the point of consumption. I sympathize with you, because this whole exercise of recyclability has not already become commercially viable. And it's not only in your case, but around the world. And even there are discussions about whether this model is even sustainable itself. So maybe you can address on that. Now, coming to our Kepro, my colleague there, yes, industry has accepted responsibility for the packaging waste. And I can either collect this individually or join a community. And the community which the law has allowed is this producer responsibility organization. Now, we are paying you money to transfer that responsibility to you. So how can you accelerate this collection so that we don't see waste in the waste stream? Because the recirculation rate is still not very noticeable. Thank you, Rapporteur, for those many questions. I'm talking as a packaging professional, so at the end of the day, when all the rules and regulations are made, it will end on my desk, that make this, but we are listening, and we are doing something about it by building knowledge, expertise, and coming to these conversations. Thank you very much.
Thank you. The person behind him, and kindly let's do one question per person for the sake of time. We still have another session which is behind us.
Okay, my name is Francis. I'm the CEO of Freak Limited. My question will go straight to our colleague on environment. Okay, there's more of a concern, because you see, if we are dealing with waste and recycling waste materials, what are we doing as NEMA when it comes to e-waste? Because if you look at the ratio of e-waste materials that have been dumped all over across, how are you handling e-waste, and how are you doing e-waste management? Because if you look at the risk of e-waste management and also hospital waste management, whereby you can find risks of children playing on areas where maybe medical wastes have been thrown. We have the likes of syringes and the likes of this, where some of these disposables are supposed to be banned off for them not to be at, for them to secure, the environment in a cleaner way, whereby we don't have risk of children or other people getting, other effects or getting affected with this kind of waste. So what are you handling this? How are you handling this as NEMA? And I'd like to hear your concern.
My name is Dennis Kiprotich. I have a question to Engineer Peter. He mentioned that KenGen has plans to increase generation by around 1,500 megawatts by the year 2030. However, for us to industrialize, we need at least, as at now, 10,000 megawatts. And there are technologies that are emerging, such as AI, which are heavy consumers of energy. And so I was wondering, what are the plans as KenGen and also as an industry that generates power to generate enough power for these emerging technologies and also to allow us to industrialize quickly? And from where you sit, what is the future of generation in Kenya, bearing in mind the two factors that I've just stated? Thank you.
Thank you. My name is Shem Kiviat. Is to Engineer Peter. As Kiprotich has just mentioned, I'd written here, we have 1786. The demand is 10,000. Yeah, congratulations for being green. That is for starters. And also, the job you have done is good. But the question is, as business people, they are always affected by the cost of power. considering that we need 10,000, you are doing 1,700. That's barely 10.7%. Do we see a reduction, or from where you sit, can you assure the producers that you will stabilize the prices of power such that you can increase their competitiveness? Because this gap is too big. Yes, you're doing a good job. Yes, you're going to add 1,500, but it's 1,500 over 10,000. So we are going to be crying for the next 10 years about the cost of power. Is there anything you can do about it? Number two, you've got a good idea of, which you have brought up, of the Green Park. What is your youth agenda of that Green Park? Because if there are any people who can have a quick uptake on the green energy, it will be the youth. Are you considering them? Because their uptake will be faster than yours and mine. Thank you.
Thank you to panelists. My question goes to Prof. My name is Mwema Wambua, in charge of industry, Machakos. My question goes to the Prof. It's about how localized or palatable is the discourse around NDCs outside of policy circles. For instance, if you go to an industrial an industrial zone, maybe in this case, Earth River, the manufacturers of the industry is aware about the NDCs, and have you put in their existing compliance or M&E measures that we can track the implementation of the NDCs? Thank you.
Any other question?
Thank you very much for this chance. My name is Areri Patrick, and I will not like to repeat what the others have said. Okay, thank you. My name is Patrick. I would not like to repeat what the others have said, but only to ask maybe for the regional competitiveness of our nation, what's our position to Kenyan when you compare our rates to the others? What's our position, and also on the waste management? I would like to hear that. Thank you.
Okay, thanks a lot. My name is Nick. My concern is about I attended another conference whereby the EPRA, I attended another conference where the government is, the EPRA, they are about to be given loan to do exploration of petroleum, which is hydrocarbon. Why can't they use that loan to maybe to come up with a green energy production? Because we know petroleum is one of the greatest pollutants of the environment. And another case is about the waste handling. Like we have just a simple technology like here at the Dadora. There is continuous burning of waste. Yet we can even incentivize people to do even waste separation at the source. We can start from what we can afford before going to the most complicated technologies. Okay, thanks a lot.
Thank you very much. I think allow us to answer those sets. I think most of them, they have gone to NEMA, and then I think also we have Kenyan. PR, do you have? So let's start with.
Okay, thank you, delegates, for these questions. I attempt the ones that were referred to KenGen. I think from Joseph Nyongesa, you talked what can we do to utilize a lot of the waste that emanates from our households and industries, especially what is in Dandora. And I think there has been studies that have been done to find out whether the waste in Dandora, and I think our colleague who was the last one to ask a question, whether we can utilize this waste to generate electricity. And the studies actually showed that it is possible. That project, we were supposed to partner with the county of Nairobi or any other county that has this waste, and discussions are ongoing to see whether it is possible actually to establish these projects. What is important is to ensure that, as we are saying, this waste is separated at the source so that you don't mix up what is recyclable and what can be utilized to generate power with other kind of waste. So that is still on the table, and we are still looking at that. Dennis, you challenged us. We are only looking at increasing our generation by only 1,500 megawatts, and it is true that might not be very substantial, considering that our country, what the president talked about the other day, we need more than 10 gigawatts additional power to be able to develop our country and move it to the levels that others are. But we are saying this is a starting point. Arising from what our president talked about, the energy sector has been put together to think about how do we accelerate generation of power in this country to the levels that are required. In fact, after this meeting, I'm headed to a meeting at the ministry where we are going to discuss which projects. And some of the projects that the government is thinking about is even nuclear. We know nuclear currently is actually the safest mode of generation of power, considering the current technologies that are being applied in generating nuclear power. And it's very easy to deploy, but of course it requires a lot of work before you can be able to establish a nuclear power plant. The plans are there for KenGen to work together with the NUPEA, and perhaps looking at 2031, we should be able to have the first nuclear power plant. And we are talking of perhaps even putting a nuclear power plant that can generate up to 6,000 megawatts. We can start with 2,000, then the next phase 2,000, and the last phase 2,000. And that, of course, will now bridge the gap that we are looking at. We are also looking at the High Grand Falls. Is a project where feasibility had been done earlier. We will need to revise that study and look for financials. We can be able to actually do another hydropower plant that can generate 700 megawatts. All that, including what we are doing, and of course what I talked about is what KenGen is doing. We also have independent power producers, and they also have their lined up projects that would be able to meet this gap. What are we going to do, or what are we doing to stabilize the cost of power? I think KenGen being in the position we are advantaged because we are able to get concessional loans that are only lent from the government, although we know the physical space for the government is quite limited at the moment. But we normally get our loans for implementing these projects at very reasonable interest rates, and that enables us to put to the grid electricity that is at a reasonable cost. But even having said that, we are also negotiating with the financiers, and we know that considering our balance sheet, we are also able to negotiate a reasonable interest rate with the financiers that can also help us to lower the cost of electricity in this country. The Green Energy Park and the youth agenda, of course, that is very important. We encourage that even as we advertise this space, the youth are also encouraged. And we are not discriminating. We are not setting a limit as to what kind of a level of a business that we are looking at. But we are inviting everybody to come and we have a discussion. Of course, The main thing arising an advantage for this green energy park is we are going to create jobs for our youth. Either those who are going to establish small businesses that are aligned with what will be happening there, or direct jobs offered by the industries that are going to be set up there. What is our rate, Patrick, rate of power cost? I know you must be looking at the costs, comparing costs between perhaps our neighboring countries, Ethiopia, you can look at Uganda, you can look at Tanzania. Of course, it looks like our cost of electricity in Kenya is a bit high, but it's because as we actually apply cost-reflective tariffs, and that is the reason. And in the region, we are establishing what we call the East African Power Pool, and one of the areas we are looking at is standardizing the cost of electricity so that every country can have a cost-reflective tariff. Most of these countries where the power cost is low is because the government is subsidizing. And you know, when the government subsidizes the cost, it means it is drawing money from where your taxes and utilizing that to bridge the gap. It's the same story at the end of the day. So we are working together with the countries in the East African Power Pool so that we can also be enjoying, importing power from other countries, perhaps at reasonable cost. I think, I don't know whether there is any other question I've left out, but if there is any, maybe my colleagues will help me. Thank you.
Okay, I can also quickly run through a few of the questions that were directed to me. Nyongesa is my senior and industry colleague. In terms of EPR helping accelerate collection rates in Kenya as far as waste management is concerned, I think we must first be cognizant of the fact that we are still in the wet cement stage in terms of EPR adoption in Kenya. Remember, first we said we are doing a commendable job as far as adoption is concerned. At a continental level, I think we were the second country after South Africa to have EPR as a mandatory requirement for all products coming to the Kenyan market. Now, there are still teething issues. First, an understanding of what EPR means for you and I as a consumer, what EPR means for the manufacturer or the brand owner introducing a product into the Kenyan market. So first is, of course, the very basic intervention of awareness creation, and first to the manufacturer and the brand owner on what EPR means, so that they're not looking at it as a hit and on their P&L as far as their financial records are concerned, but as a way to contribute to the good of the society and really obtain that social license to operate. On the other hand, then, are the primary stakeholders within the value chain. And this is James, Nyongesa, Professor here, really everyone in this room, as far as environmental stewardship is concerned. Because as long as we are doing the right thing in terms of putting our waste in the bin, then really we shouldn't be having a problem around collection of waste in the interim. And EPR is coming in to solve quite a significant chunk of the problem, especially when you're talking about adding disruptive financing or incentives to some of these value streams that initially never had a value. And the idea is that the capital injection will trigger collection. And tied to that then is a bit about, for those who are aware, is it a case of deliberate ignorance or a choice not to comply with the law? So at KEPRO we say we are having around 1,100 members. But remember, the law provides for certain obligation for these members. Unfortunately, if we are to do an audit and verify who is complying with the law as far as the verbatim is concerned, you'd be looking at less than 40% compliance rate. So that means we will have to do the much we can with the little that we receive from our membership, hence the reason why maybe the impact is yet to be felt in the ecosystem. And of course now, as I mentioned, behavior change amongst our consumers. Remember, in addition to you doing good for the society and the environment, you're also liable to a fine of up to 20,000 Kenyan shillings or imprisonment of for a period not less than, or rather not more than 1 year, for not properly disposing of your waste. To the question by Patrick on our position regionally as far as matters waste management is concerned, and I think these I've responded to. We are doing fairly well compared to Tanzania and Uganda, who are now coming in to learn from us as far as implementation of EPR is concerned. The East African Single-Use Plastics Bill originated from Kenya, so that should tell you that Kenya is pretty forward-thinking as far as matters waste management is concerned. Now, lastly, to the bit about incentivization on disposal habits. I think this is not me trying to be politically correct from a manufacturing or brand owner point of view, but how many, I mean, to what extent then can the producer or the brand owner be able to absorb the cost of incentivization? How much would I be able to pay you to incentivize you to take your phone to waste center at the end of life for it to be able to be recycled? You see, it's a very dicey question, but I think EPR is trying to do that. As I've mentioned, PET, the rigids were fairly, had some significant pricing within the market. Unfortunately, others don't have that pricing, and the idea is that then the member contribution through EPR is supposed to trickle down to the industry players and add value to the particular waste streams that never had value initially, and of course that would then start triggering collection. But the incentivization bit, it's neither here nor there, because in some waste streams that can work. We've seen, especially for beverage manufacturers, the deposit return system working fairly well, and that has been piloted here in Kenya. Tried for a few months. The excitement of typical Kenyans, we do it for the first month. Then after 2 months, unfortunately, the vending machine cannot even be able to support its operational costs because the volumes that would be coming to the facility are not enough to make a business case. But we can have a side discussion to see if you can give me a solution. Thank you.
Thank you. I will try to respond to these questions which were posed to NEMA about that ecosystem reality to, okay, whatever we have in the law, we bring it to reality. And it has been mentioned here that when it comes to waste management, there's a role that NEMA does, and then there's a role that county governments do. As you know, waste actually management is a devolved function. So there is an extent to which NEMA can go, creating those, the laws that are can go into regulating this sector, and we've done so well. We have MCA. Issues of waste management are well addressed in the Environmental Management and Coordination Act. Then we have Sustainable Waste Management Act, among others. And what is in the Act actually specifies that it is your responsibility as an individual to manage this waste responsibly. Actually, waste management starts from you. And then there is that provision of your right to a clean and healthy environment. And that if you are not happy, you are not satisfied with the way your neighbor is managing that waste, that you can even go to court direct instead of even coming to NEMA. Yeah, and that is where I find most people running away from responsibility, reporting to NEMA, and yet you see you can start direct by the, complaining using the normal channels. Is it by going to the nearest place you report a crime? Okay? Yes, and then it is done. If I can give an example, I was employed in 2004 and posted to Kisii. And then what I had was MCA
to fight waste management. You know, what I decided to take this waste management head on, because where I was staying, I asked the caretaker, where do we put this waste? You go leave it with the watchman. Then the following day, as I'm walking to the office, I find my whole, that yellow bag full of that waste in the middle of the road. So as an EMA person, where do you go complaining to? So what I did that time, it was the era of county, municipal councils. So an awareness, 2 days, followed by enforcement. I mooted something we call the environment scouts. So what they do, they find you dumping where it's not supposed to be. They do what? They kind of arrest you until I come. Because you see, I have to find you with an exhibit. You are dumping somewhere, and so they have to restrain you until I come. For just 2 days of that awareness and enforcement, the waste that used to be found on the road, it just disappeared. The first person to be arrested is a caretaker of a very senior person who was working with the KNUT that time. So a worker arrested, and then second is the wife to a very senior advocate in town. So the same thing, arrested. Then word went around, NEMA is not a joke. So first of all, we just cleared everything in those first 2 days of campaigns and awareness. Then from there we said, these are the designated areas, we should not find this and this. So with that one changed. So it worked then. Things have, and up to now, of course, that the environment scouts, they continue working. That's why you'll not find those illegal dump sites everywhere in town. So what I'm saying is that it starts with an individual. And if you're not happy with it, can we take action? But also know that waste is a devolved function. It is actually the county government. I hear a number of people saying, NEMA, what are you doing for this and this? But in the real sense, the county governments are supposed to really take it up seriously. The issue of the NDCs, we have the NDC that we have. For us to implement it, various sectors have been given responsibilities. In the the manufacturing sector, actually, I saw my colleague here, he participates in this. Ndugu Home, I saw him somewhere. Yeah, yes, he's there. So when it comes to tracking these commitments that we've made from the industry sector, the manufacturing sector, so they are very good at that. We have those ones who track NDCs committed in the waste sector, in the energy sector, etc. I think that is it. The issue of e-waste. E-waste, he has talked about we. So far, it is the body that has been recognized in handling e-waste. And well, I don't know, I've not seen a lot of littering, especially from that, of this waste, e-waste. But because it is an area that has materials which can be recycled. But we have a regulation also governing this particular sector. Medical waste, again, as we said, it is against the law to just, it is something that is regulated. Waste is medical waste is regulated. Where you find it dumped in an illegal place, then actually that becomes, that's a crime. It's only that we cannot be able to trace that. But medical waste is highly regulated. The medics know it, that they must have an entity contracted to collect medical waste and take it where it's required. Thank you.
Thank you very much. I'm told we are running short of time. So because also maybe our lunch is growing cold, we would have wanted to do another session, but I'm saying it's almost 2 o'clock, because also we have to be cognizant of the fact that also the hotel, maybe the timing for their lunch, so that we don't interfere. So otherwise, I'm so grateful. Thank you so much. We have learnt a lot, and I'm sure my rapporteurs, you have captured, you know, the points, the main points. You know, we have said we start from individual. Waste is an individual, you know, it's a responsibility individually. And then even as you see, you know, sometimes that's why we say, even you can see something on the street, maybe some of us, the way we were brought up, we find even like thorns or everything, we stop to remove them. We stop even to clear. So the same way we should have that kind of responsibility when you find something which is not placed in the right place, so that at least you can make sure it is placed in the right place. And we should view waste as wealth, because now we are moving from the linear where we were doing industrial production, you know, you finish and then that is waste. Now we are looking at it in a circular way, such that whatever comes, it becomes a byproduct, and it becomes a line where you can actually produce new things. So thank you very much, and it has been a lively one. I thank you. I think give them a loud of applause.